out here.
Yeah. So
We gotta figure out how to make this screen clear.
I was watching the World Cup. You were the World Cup, right, between Spain and Argentina, and Argentina didn't show up for the World Cup, and they were heavily favored because it seemed as though FIFA had rigged the World Cup to benefit Argentina. So Argentina did not face a top 10 team until they faced England in the semifinals. Argentina only played at night or indoors in the afternoon. And Miami was the first time they played outdoors in the afternoon. And you looked at all these VAR decisions, none consequential decision went against Argentina. So it seemed as though the path was being cleared for Argentina to win the World Cup. And during the World Cup, again, you were there, they didn't really show up.
Alright, I would have to
No shots
stop
on goal in the
stream
first
to
90
lose
minutes.
this detail.
They were fouling a lot. And after they lost, they became really, really angry. And I think the idea is when you plan like too much, when you manipulate things too much in favor of a team, what often
Output
happens
mode
is
to
the team,
advanced.
the people
Mine
get
shit's
hopeless.
simple.
They become arrogant, they become lazy, complacent. They also have a deep sense of guilt. So, I think that the Argentinians, they had a really complex set of emotions going into the game, which affected their play. The Spaniards, on the other hand, they knew like the game would be rigged in favor of the Argentinians. If it were a close game, and if it went down to penalties, then they would definitely lose. So they had to bring their A game. They had to like
Windows
settings
settings.
to actually win the game, and that's what they did. So I think the World Cup, I think it marks a turning point in this war against Zionism, where before,
Display.
I think a lot of people are like, oh my God, the Zionists have all the money in the world. They control the political apparatus. They control the Pentagon, right? This is all hopeless. But then you watch the World Cup, and originally it seemed as though Argentina, it was all in the bag for Argentina. And what happened was the Argentinians give up a sense of hubris, so they became lazy and complacent during the game. And the underdogs, the Spaniards, they overperformed. So I think like the World Cup, it's gonna send a subconscious message to the world that, the Zionists, they're not invincible. And they are going to at some point. So and I think this NDAA it marks a point when they really when it's so blatant, it's so in your face, and then you have the Epstein files, of course. You have what happened in Gaza, what's happening in Iran. As you say, Finance Minister Smotrich came out and said that we will not be helping this war in Iran. We're good in Lebanon. We're based in Lebanon. We can't send forces to Iran. So when the Americans start sending ground troops, and the Americans start sending a lot of casualties, then I think public opinion will start to turn against Israel because, Trump already said this. America started this war for Israel. So why is it now like Israel has abandoned ship as the most crucial point, right? So I do think that this marks a turning point.
Well, we'll see. But there was playing into your analogy. I went to the game, and there were two that showed up at halftime. And the first thing that the guy asked me, I didn't know there were at the time, even though they had Argentinian jerseys. Like, maybe I should have assumed it. But he says, "Hey, can you send me a photo of the flags on the field?" I showed up late, and he wanted to post an Instagram story of the flags. So I put my phone on his phone, and I airdrop him a video of the flags, and he posted it. And later on, it's extra time, and there's a Messi fan next to me, and he's saying, "I hope FIFA can rig it," because he's like making the joke that FIFA's rigging it for Argentina. I'm like, "Yeah, no, Netanyahu, Bibi got to make the call." Just joking with him. It's all in my video. And then the two, they probably realized who I was, and they just start like they chimp out. They get really angry, like, "Don't bring politics here! Don't bring politics here!" I'm like, "I'm not talking to you." And this just starts screaming. And then later on, they do a BB chant. They go BB BB. Then Spain scores, and it's 1-0. And I'm talking back now. I'm like, "Yeah." When they come through that Argentina's gonna lose, the guy.
Whoa.
What's that?
I just built a budgeting app in Base 44.
Guys, Nina just built an app.
Impossible. Maybe I can. Interesting. Can it generate reports?
It can now.
So you're saying lunch.
I gotta make a call. I just built an inventory.
Let's say it's $1 trillion or so of off-balance sheet debt. That means that there's $1 trillion in loans that we just don't, we actually cannot really quantify outside of media reporting. This is a corporate scandal. This is a huge scandal. This should be front page news everywhere. This should be a shareholder right. But because we live, as you put it well on my show, in this cult of worshipping the wealthy, we just kind of put it to the side. This is a significant risk to these companies, though. Like Google, we're talking just as Google's earnings came out, they narrowly missed on search revenue. Their other businesses are slowing down. It's happening across the board. So their businesses are going to slow down just as these massive debts creep up.
Welcome to Prof G Markets. I'm Ed Elson. It is July 23rd.
Now I could only show things on this channel that I'm particularly good at, but it wouldn't be as fun, and I like to learn and elevate skill sets and do new things, so you'll definitely see more slow, boring periods like this. But if you read and stay around long enough, maybe you'll learn something.
Today's market vitals.
We'll have to see what happens.
Nasdaq declined. The Dow was flat. Brent crude climbed above $95 per barrel for the first time in nearly 6 weeks, as both the US and Iran escalated their attacks. The yield on 10-year treasuries increased, and finally, Google and Tesla shares fell after both companies reported earnings. We will get into those reports later. Okay, what else is happening? The big AI spenders are increasingly turning to debt, and a lot of it turns out to be hidden. A Nikkei Asia investigation found that 5 tech giants, Alphabet, Microsoft, Amazon, Meta, and Oracle, are carrying roughly $1.65 trillion in debt that doesn't show up on their balance sheets. That's more than the $1.35 trillion they actually report, meaning the debt we can't see is now bigger than the debt we can. Meta's off-balance sheet debt is roughly 3 times its reported debt, and Oracle's has ballooned about 30-fold in 4 years. It's all legal, but it raises one big question. What happens if AI demand isn't as strong as investors are betting? Joining us to discuss this question, we're speaking with Ed Zitron, author of the Where's Your Ed At newsletter and host of the Better Offline podcast. Ed, thank you for joining us. I just want to give you some context. Yesterday, I was talking about Oracle on this show, and I was talking about how they're increasingly relying on debt to finance their data centers and how it's becoming kind of borderline unmanageable, and that's why their credit rating is getting downgraded and their borrowing costs are exploding. They're kind of being sent into this downward spiral. Up until this point, though, it has been my understanding that the debt in the AI ecosystem has been relatively contained to a handful of companies like Oracle, but that it hadn't infected the bigger names, which is why I was so alarmed to see this reporting from Nikkei, which says there's $1.7 trillion of hidden debt that we haven't been seeing, that we haven't been looking at. You've just written a huge piece on this. You investigated these numbers. You did a sweeping analysis of all of this. What do we know about debt in AI, and how is it that so much of it appears to be hidden?
So there are several factors here. With the hyperscalers, the reason they're able to do that is because they've found this interesting accounting treatment that Ernst & Young claim is a red flag in Meta's case, where when you build a data center, it's not like you as the company say, I'm going to buy all the stuff, I'm going to get the debt for this, and here we go. They make a special purpose vehicle or a variable interest entity, which is basically an SPV where you don't own as much. So, for example, with Hyperion, I think investors like PIMCO and Blue Owl own 80% of it, and Meta only owns 20% of it. Despite Meta being
Yeah, we'll be reading 10Ks today
the
too.
person that's going to fill it
10
full of
Qs.
GPUs as well, I think they're moving some across their assets.
I need to figure out how I want to put all these in a notebook.
And saying this is our
All these people have portfolio holdings. There's 141. So I'll go through and see all their portfolio holdings. But I'm trying to just in my mind visualize how to get these into a notebook. If you see, I don't know where it is right now. It's a lot of books. No. Oh, here we are. It's this one then. Yeah, see, we got companies. I don't know if this camera's getting that, but pretty much companies after companies. So it'll probably be in this notebook somehow. I also started writing all 500 S&P companies. I'm at 200, so I gotta finish that too. I got 300 more of those to write. We'll do that today. Yeah, I think it was from this one. What'd we end on? We're at 200. Pfizer was all in black. I'll tell you what, scrolling to it got there a lot faster than writing them down. All these pens almost have no ink in them. That's good. Okay. Here, we'll do a couple of these. So then I can figure out how to I'll probably go through, write the names of the people, and then put their holdings. And this shows it way more. It's not a good example because they only have 4. Nelson Peltz, let's see if Wendy's is in here. Yeah, look at this. Honestly, as soon as that gets to a little bit of a... Was that like 20 something? Tanked. I'm waiting to buy that. I'm gonna buy a lot of that. This guy's a big player in the AI space. Some of these people only have 4, so we'll go to someone with, yeah, I don't want to, it's just dividend companies. Air 27, I looked at this one the other day. And here's the reality. Most of these websites, in fact, all of these websites you don't have to pay for. Because even if they block something off like this, if you really want the info, you can get it just by searching the company and then, let's say, industry group. Yeah, so watch. There you go. So, I mean, that's just kind of a trick of the trade. Not really anything unknown. But by the time you would sign up for all of these websites, you're pay in info that if you just use them simultaneously, then you can end up getting all the information. So, alright, back to the list. Ford Motor, Fortinet. And the reason I write them one by one is that so I have them in a place, and then when there's crashes or corrections, kind of like today, I'll go through these lists and find places to park cash for gains. And then it keeps me sharp on what companies there are, because I've gone through and written them all. Franklin Resources, Freeport. McMoran. Yeah, actually, Garmin was a huge miss. Especially for how they're using it in boat navigation. Everybody just thinks of it. Yeah, look at this. Scooping that. Sheep. 210. Yeah, so again, this isn't the most interesting of things, but you can learn companies. Maybe you see something to invest in. All sorts of things can happen just by putting the time and the effort and the work in.
Data center, because they don't have full ownership of it, it's not counted as something they put on their balance sheet. They will have it, I think, within operating leases when it starts paying. But the thing is, this is the entire AI data center industry. Every one of them are these SPVs that people pool money into. The SPV owns the debt. The SPV often owns a lot of the risk, though through non-recourse loans, which means that technically you have to go after the assets of the SPV before you go after the company. But nevertheless, these things own the risk, they own the GPUs, they pay investors not out of anything other than the revenues from the data centers, which leads to the important point of what happens if the revenue for the data center isn't there? How do investors get made whole? And the answer is they do not. And the only reason this is not considered a problem yet is it hasn't actually happened. Like the data centers have not been built at the scale that would have to happen for the revenue not to flow in.
So just to back up to an SPV, what actually is an SPV? And this is important because you say that these data center SPVs are the
It's a special
AI
purpose
bonds
vehicle.
equivalent of CDOs, which of course were the financial instruments that basically sparked the great financial crisis. You say that that is our equivalent today. So what actually is an SPV and why are they so popular?
So to be clear, a CDO is slightly different. It's holding mortgage bonds and stuff, but they are the same kind of financial instrument that will cause genuine harm to the markets in the world. So an SPV is basically a company. It's a company, it has people that technically are on the board of directors, you can do that, but really it's just a holding entity for money and stuff. And so when they build a data center, that SPV raises the debt, that SPV holds the debt, that SPV buys the GPUs, it builds the data center, and when the money flows into it, the SPV is the one that pays out to contractors, that pays the OPEX costs, and there's a cash waterfall even where it goes, paying OPEX, paying investors, and then paying the people that own it, in theory, if there's more money than there should be. That is not going to happen, but nevertheless, these things are so dangerous because
they are being sold as stable infrastructure like commercial real estate or residentials and just saying, oh, it's physical land, it's good, it's great. But the problem is, and the critical difference, is that data centers are nothing like a regular mortgage, and they're nothing like commercial real estate. These are complex financial operations, both in the construction and the ongoing costs. And then there's the important thing of, you need revenue to actually get paid out of them. And because they're all project financing, which just means they exist to finance a project, there is no other money for them to pay people out unless, like, the company on the other end, a Core, even Oracle, what have you, isn't on the hook for those payments. Basically, the client is. And if the client is, say, I don't know, OpenAI, and can't afford to pay it, then investors who have invested in these SPVs, well, they're kind of shit out of luck. And the problem is, when I say investors, I mean anyone who's involved in private credit right now. Private credit is well funded, as I'm sure we'll get into, by pensions, retirement funds, insurance funds, teachers' pensions, cops' pensions, all this different stuff. We are all involved in private credit, whether we want to or not.
I just want to read you a quote from Amanda Yacone of Bloomberg, and you quoted this in your piece. She made this comparison to Enron. She said, quote, Enron exploited U.S. accounting rules to hide from investors and lenders hundreds of millions in
I
debt.
can't remember specifically off the top of my head right now, but I've seen a lot of use of SPVs.
To one of the biggest corporate collapses
It's
in US
kind of
history.
frequent, but again,
And
it's
what you are
used
describing
for
right now is that there is a
more
trend
questionable or
among
risky investments.
the big tech companies, Meta, Microsoft, Amazon, Google, Oracle. They are creating these shell entities, these SPVs, seemingly to hide literally hundreds of billions of dollars of debt that they are issuing in order to finance their data centers. In other words, they're showing us in their reporting and in their earnings, like, here's everything we've built, but then they're hiding all of the borrowing that they took on to build all those things that they're kind of bragging about in their reporting.
Yes.
That does seem to be a very, very similar link. I guess, could you expand on that, on how this has come to be and potentially how this might unravel?
So, I want to be clear that other than Oracle, I don't think these companies die. But I will say, it's kind of hard, that Nikkei piece, it wasn't clear if they were saying there was $300 billion or $1.6 trillion of hidden debt. It was a
Damn,
very
why do you
weird
call
one,
out
because
Oracle like
let's
that?
say it's $1 trillion or so of off-balance sheet debt. That means that there's $1 trillion in loans that we just don't, we actually cannot really quantify outside of media reporting. But I must be clear, it's not just hyperscalers doing it. It's CoreWeave, it's Iron, it's Nebius, it's NVIDIA in some cases. It's whoever is building a data center is using these shell corporations as a means of obfuscating ownership and also obfuscating risk. As in, basically,
Yeah, I would
handing off the
not
risk
get
to investors,
involved with
even though there are
anything.
some that are recourse loans, even if there's a up the chain, you could eventually sue the company. At that point, you would have sold off all the
AI
GPUs, so you'd
right
be
now.
screwed either way. But the larger point is, yeah, this is a corporate scandal. This is a huge scandal. This should be front page news everywhere. This should be a shareholder riot. But because we live, as you put it well on my show, in this cult of worshipping the wealthy, we just kind of put it to the side. This is a significant risk to these companies, though. This is a real, like Google, we're talking just as Google's earnings came out, they narrowly missed on search revenue. Their other businesses are slowing down. It's happening across the board. So their businesses are going to slow down just as these massive...
Taking meeting notes in 2026 is easy, even without a bot joining the call. I'm in meetings all day, and trying to take notes during calls and remembering to follow up on everything after really slowed me down. That's why I switched to Granola. All I do with Granola is jot down notes on the important things during the call, and then after the call, it turns it into a full recap that's nice and clean, and I can send it right off to my client. And the best part is, it never joins the call like a traditional meeting bot. It's a lot more passive.
Alright, so we're at
I'll leave a link so you can try it
2:38.
today for free.
debts creep up. And let's say they have ways of getting out of these things. The investors will still be screwed. The investors involved will still be screwed. And if they cancel these projects, I imagine they'll pay off investors to a point, but anyone involved is going to take a loss. And then this spreads out. Like, this is the good news. The fact that the hyperscalers have these are the good SPVs. These are the ones that I think might survive. The problem is, every single data center is through an SPV.
And every single investor who's invested in a data center has invested not in the data center itself, but in the potential revenue it brings in. And the problem there is that is dependent on there being 15 or more times the AI compute demand than currently exists. It's genuinely terrifying when you start quantifying it, and people are way too flippant about this stuff. They say, oh, it's not as bad. Oh, it's not as bad as the great financial crisis. It's still a great financial crisis if this happens. It's still horrifying, and it's everywhere.
You write, quote, much like a subprime mortgage, AI data center debt is being poorly underwritten, virtually uncollateralized, and issued to projects that have extremely low likelihoods of repayment, all based on flimsy information and hype-driven mania, end quote. Sounds like a provocative statement, but I actually think it's pretty much factual and correct. I think one thing that isn't in that statement, when we make the comparison with the Great Financial Crisis, is the fact that a lot of that poorly underwritten debt, that virtually uncollateralized debt, was obfuscated and hidden away to the point where ratings agencies and investors and traders didn't even know what was happening, because it had been so well hidden in the markets. It had been so well kind of complexified. I guess my question to you, do you think that this is the same situation where investors, ratings agencies, I mean, we know that S&P just downrated Oracle's debt, so clearly they have some semblance of an understanding of what might be going wrong here, but is it your view that this is not being priced in, that investors literally don't know what is happening in terms of
That's what he's been
debt
saying
that is
this whole
being
time,
issued
G.
among many of these companies?
So, let me tell you the tale of private credit. So, private credit in the last few years has gone on a tear, merging with or acquiring insurance companies and retirement funds. Apollo bought Athene, well, they merged with them. Blue Owl bought Couvert. I forget who the others are. Nevertheless,
Did that
Blackstone
recover? I meant to buy
retirement
that.
funds. The problem is a lot of the SPVs are funded by private credit. That private part is the lethal part.
It's
S&P
still around
doesn't
9.
rate private debt. No one does other than the private credit fund. So there was a story in the information a few
When did
months
they have
ago that
earnings
said that
next?
Blue Owl decided to invest, I think, up to $10 billion in
July
Stargate Abilene
30th.
after 10 minutes. How much due diligence do you think we can get done in 10 minutes? Probably not very much. This is standard for the SPVs. So while people will say, oh, well, the ratings agencies failed here, actually, no, the SEC failed here. The insanity of private credit, which is basically a multi-trillion-dollar shadow banking system, is what's propping this up. For the most part, the debt raised for these SPVs is coming from private credit. You look at Corewell, it's coming from private credit.
Yeah,
When it comes
let's
from
see.
the banks themselves, SMBC and MUFJ out of Japan, they're just funneling the debt straight in. So much of this is coming through institutional investors that are funneling money through private credit that the ratings agencies aren't even involved. And the ratings agencies don't. The only reason they did it with Oracle is Oracle has predominantly raised its money via bonds, except for the fact that a lot of their private projects are SPVs, and the SPV raises the debt. And it's this situation where, in theory, like I think the Michigan data center they're building is a recourse loan, so you can go directly after Oracle. But that's the thing. Even in that situation, there are these legal barriers that, if every data center is exploding, will make it hard to litigate at scale, or at least hard to pull down who's actually responsible. And we don't, if you are anything touching an Athene or a Couvert or any other insurance company, it is worth checking where the money's going. I think Allianz actually invested in a Cyrus One bond. And the thing is, these bonds get rated somehow, they get rated as junk, but because insurance companies are now effectively run by private credit funds, I don't give a crap. It's like, sure. Because of this giant lie. And this giant lie is that data centers are the equivalent of investing in power plants and factories, that they're AI factories, when in fact what you're investing in is a very large, town-sized building or campus that is full of depreciating GPUs for an industry that has not proven it has the demand. And I mean, my estimate for actual AI computing is
I need to look at
100,
invitation
120 billion a year.
homes.
I did the maths, and it's something like, if they build all 130
Let's see
gigawatts
what's
of
going
IT
on
load,
with
so the
that.
actual operational GPUs, that they say is in planning, based on Sightline Climate, we will need $1.68 trillion of annual compute revenue. We'll need that just to pay for them all. And they'll have to pay consistently, because if you stop paying consistently, the loan covenants with the SPVs break. And the crazy part about this is the global software industry is less than $800 billion. So we're just going to magic up another software industry? And to be clear, what I am saying sounds radical. I think you kind of said this already. It sounds like a scary thing. Oh, it's alarmist. But this is just...
Hi, I'm Andy Levian, General Counsel at the DNC. We just sued President Trump and Doge, and I hope you will support us by donating to our fight fund.
I hate this shit.
Here's what you need.
Very basic maths. This is Sightline Climate said 190 gigawatts of capacity was in planning or under construction. PUE of 1.35, which is just the energy efficiency. 130 gigawatts, $12 million a megawatt. This is simple maths that anyone could do. And the thing is, even if it's just half of that, we still don't have enough demand. And so we're in this weird situation where this risk is now spread everywhere, to the point that because it's private, we actually do not know how far. And it's within the insurance companies. It's different to how AIG collapsed. It's just smaller. It's smaller little bits. But the other problem is that AI data centers are so expensive. They cost 500 million minimum, probably several billion. So instead of having millions of or hundreds of thousands of subprime mortgages that collapse in a kind of slow boil
Alright,
over
we're at
time,
266.
it's gonna be a 500 million, a 6 billion, a 2 billion, a 1 billion collapses. And each time one of these happens, that's a massive markdown with a private credit fund, but also a bunch of investors who have lost money and have no recourse beyond, I don't know, selling all the GPUs in a market that will become saturated with them.
Yeah. It's the recourse point that is getting us into such dangerous territory here. I mean, it's one thing to sell equity on a speculative bet about the future, in which case, the people know what they're buying into. We know what the risks are. It's another thing to finance an extremely speculative business through debt, and then to hide that debt. Because, I mean, if this doesn't work out, we're not just talking about equity going down here. We're talking about bankruptcies. We're talking about defaults, which
There's
is
also one other problem, which is the reason that insurance and retirement funds invest in private credit is because they need yield. They need ongoing yields. So if these data centers do not pay out, we have retirement funds and insurance premiums that cannot get paid. And I'm sure they have some buffer. I'm sure they have other assets, but it doesn't have to be an AIG commercial paper level collapse for this to be systemically damaging. And after this, there is no more yield to be found, I guess, other than treasury bonds, which are going up now, yay. But when they go down, I don't know. But so it really is, and what sucks is most people have no idea about this. Most people don't realize that, like, the California pension fund is invested in Blue Owl. Like, it's everywhere, and it's not just in America, it's across the board. You've got, I think, the Dutch pension funds in data centers, CDPQ, which is the Quebec pension fund.
Honestly, there's an argument that they're not going to let them
data
fail,
center.
though.
Like, this is everywhere, and I'm furious at the fact that it's so rarely discussed, but also people are so quick to be like, oh, it's not as bad. Oh, it's not as bad. Not as bad is still bad.
all right. Well, we're going to have to continue this conversation another time. I'm going to have to let you go, but it is fascinating stuff, and I do encourage our listeners to go read your article. It's extremely rigorous and gets at a lot of the issues that we're talking about. Ed Zitron is the author of the Where's Your Ed At newsletter and host of the Better Offline podcast. Ed, always appreciate your time. Thank you.
Thanks for having me.
We'll be right back. And if you're enjoying the show, be sure to subscribe to the Prof G Markets YouTube channel at the link below.
I thought that was going to be a full 40 minutes.
Planning to move? Choose Pods, the most awarded container moving company. Pods brings the container to you, then we'll take it to your new home or store.
Supermicro had some interesting results last night. Arrowware Biotech with some other interesting results. Memory coming off a very strong day yesterday. See how far it goes. All eyes on Google. We'll have that report live tonight, so don't go anywhere. We're gonna have some guests, hopefully, and we're just gonna have a great day. We're gonna do some biotech, okay? Yeah, brick by brick. Awesome. BRD, AT&T also reporting some strong results. Earnings season really getting underway now. We forgot to look at Novartis, which we should probably do. Is Ionis still down? Ionis down about 5%. I think on the Arrowhead positive data, say the top 50 gainers today, 50 mil market cap minimum. Arrowhead's up there, up 18%. Something called AirJoule, looks like a small cap. Aurelian, Oatly. Palvella is one that a lot of folks are looking at. Don't know what their story is. No, it's a biotech. I think they're doing a roadshow or something. Oh, Enlight, LASR, one hot stock there. Vishay is up 10%. Lattice Semi, FTAI, you guys know that one? Axome. Sources told Wall Street Journal OpenAI has resumed internal efforts to tighten controls over its own data centers. AMD and Anthropic signed major chips and investment deal up to $5 billion. But AMD trading down, that's pretty bearish. You don't like to see that. You'd think AMD would be up 5% or something. Not bearish. That's a historic deal, is it not? 2 gigawatt deal, tens of billions of chips, but no love for the stock. What is this? That's not good. OpenAI, is they putting a press release or something? Spend more than $30 billion on new data centers. It's a new release. Let's see, OpenAI news. Let me see here. Introducing OpenAI Presence. Nice. This, I think they announced this yesterday. Oh, this is like a customer support thingy. We have to try their new voice model. Supposedly it's pretty good. OpenAI raises projected cloud spending to $750 billion. Oh, okay. Semis don't rally on this. That's not good, right? I would think that's not good. They should rally on that. Right? That's a lot. 750 billion. It was 600, now 750. SpaceX is considering a large expansion of its data center. Come on, you got to be as long as much as you can be. All right. But again, the market tone, if it's not rallying on this, it's not going to rally on anything. That's kind of the, Now again, don't get faked out. This sort of happened when IBM had that bad number. I thought it was going to take down the whole market. It really didn't. But you know what? I would think that's bullish because it's fake. What do I running my OpenAI compute on now then? Yeah, we're not gonna look at a 10 million market cap. It's not even on, do a bunch of little stuff. Bear with me. I did not have a good night of sleep either. What else is going on? So Arrowhead is kind of the big news today. It's traded 350,000 shares. No particular direction after the gap up. Looking for signs of a direction. Doesn't want to go down, doesn't want to go up. It's flat, $88. Yeah, there's a lot of AI data center legislation, so there's definitely curious what that looks like. Okay, we're coming in a tiny bit here. Lab T, you did mention that. I thought it was too small to look at. Maybe interesting. What's up, BD? Shout out to Avalon. What's up, Big Tigger? Proprietary chip makers will streamline, make their own server stacks in the future. I'm not sure that's what they want to do exactly, right? They usually
Alright, we got the 300. Let's finish this
just make the chip,
later.
Does all the other work.
There's 200 left.
Right? Yeah, I would stay away from that Lab T. Wish I could short it. There's a lot of these stocks that are just running up like crazy. Just yesterday, some of these things are up 50%, 100%, 200%, like Lab T. But there was one that yesterday was up like 1,000%. China Pharma Holdings or something. I looked at it and it was basically worthless. I remember the stock for like 10 years ago. It was a joke. This company's like got $2 million in revenue or something like that. It's like an insane thing. Yeah, it makes sense. RM. I think there's a way to do it that lets you kind of have some some control. Like if you do a small amount for each one, but the problem is the borrow is very inconsistent. It's not easy to get the borrow off. And it's funny. I was composing this tweet and the stock dropped like 60-70%. Regardless, how crazy is that? Oh, I know like hundreds of OpenAI people because of my wife. Shout out to wifey. Short CPHI if you can. Fair value is 10 cents. Interesting, some stocks have more in common with Pump.fun inside of the stock market. Not that this is a bad thing. It's not a bad thing, is it? Okay, Arrowware. It used to be called Arrowware. Now it's called Arrowhead, right? Still call it Arrowware. Dropping a little bit here. Could be good long. Okay, market's open. What's up, Kara? Welcome to the show. Kara, if you guys don't know, is extremely beautiful. Just a gorgeous woman, and you can talk to her in our Discord. She's kind of like Amaranth in her own way. Emmy on most. Still same old story. Arrowhead up 19%. Supermicro up 16. We faded Supermicro last night. It wasn't a really great trade. What else is interesting? Summit, SMMT. It's one of the biggest biotechs. Kind of hard to trade, hard to understand that one. But we should dig in a little bit harder there at some point. X Energy, XE, probably one worth trading too. There's a company called Dario Health. Bearish. It's crazy. I saw this thing called AGPU today, and I thought it was bullish. They said something about having a zillion contracts. And then I realized it's this like fake crypto cloud thing. So I shorted it, and now it's going down. But at first I was like, how do I not know? I know every cloud. Look at this dog poo-poo. NVIDIA.
OneSource determination enables the technology industry to effectively address regulatory shifts, economic demands, and technology progress, ensuring precise tax calculation across jurisdictions. For more information, visit our OneSource technology page.
Moderna.
Intuit's accounting agent and finance agent are here to help. And you'll have access to trusted experts if you need them. So you can save time on books, taxes, and payroll. And make smarter and more profitable decisions. Outdo you doing it all yourself. Start using Intuit QuickBooks today.
Flat, despite the OpenAI announcements. It has rallied on the open, but between that and Supermicro, maybe Nvidia's gonna keep going. AMD now up. Who told you to buy it? Who told you to buy it? Skrelly did. He would have made $20 a share. Not bad. Who else? How's Taiwan Semi doing? Taiwan is supposed to do some price increases. It's pretty hard to make new fabs, man. Micron running again, 960. We're gonna see 1,000 pretty soon here at Micron. But yeah, there was this other one yesterday. Whoa.
Alright, 322.
Look at this thing. Advanced Biomed. I'm sure it's a totally fake company, yeah. Traded 46 million shares yesterday. It traded many times its market cap. What a scam. Essentially with Arrowhead, a little bit directionless. Maybe just good to move on to another one. Okay, how's Max 7 doing? Apple's flat. Kind of a boring day.
Yeah, I wanted to see what he was saying today about all this.
The money that Tesla and Google just lost. Absolutely destroyed by the collapse in Tesla stock down 14% and Google stock down nearly 9% following earnings. Now obviously there's a lot going on in the world with Iran and otherwise, but in this video I'm going to give you a new versus pro breakdown on both of the earnings for Tesla and Google. I put a lot of work into this to give you the straight new versus pro details and keep it simple. So, with that said, let's get right into it. But first, something totally free I think you're going to love. In fact, I know you're going to love it. You know how I see earnings the second they come through on those sort of wire services? You can now get that totally for free in the Meet Kevin app. This is what it looks like. At 105, Tesla earnings come out. We actually start seeing some of the news alerts of what's being said, what the earnings are, what's going on in the earnings call, and you can get these financial results and these news updates, whatever the breaking news is, totally for free. All you have to do is download the Meet Kevin app. And in the Meet Kevin app, you too can get these news alerts. Download the Meet Kevin app, you sign in, Google, Apple, or make an account, sign in. Once you sign in, you can use that same login information, and you can also go to the website version of it. So you can have it on your phone or the website version, totally free. app.meetkevin.com. Go check it out. Hey everyone, I'm Meet Kevin, and the very first thing that you need to know about Google and Tesla, starting with Tesla, is the following. The noob will tell you, hey everyone, don't worry, Tesla's totally fine. Tesla's earnings per share just exploded because the net income at the company has exploded by a factor of 2. In fact, if you look at the Tesla net income, you can see net income's actually gone from $491 million to $1.1 billion. So, despite the fact that Tesla
Yeah, I'm gonna be honest, 147. I thought this would be closer to 300 billion.
income's blowing up. But the pro comes in to ruin the day, unfortunately. Tesla only generated an extra $1 billion of revenue, $1.5 billion right here, due to their investment in SpaceX stock. And when you adjust out that SpaceX gain, Tesla's net income actually declined by 75%. So Tesla's net income, which looked like it blew up, actually collapsed. That isn't great. And the pro looks at this and says, this is going to be a problem going forward. Let's see if there's a growth vertical somewhere else, or what optionality we have for making some more money. And the next thing that people usually go to after automotive margins, which automotive margins have unfortunately compressed a little bit. We did see that margins outside of the credits that we were getting have actually declined. Automotive margins, excluding regulatory credits, declined from last quarter from 19.2% to 16.3%. That's because in the first quarter, they did take a $230 million benefit from warranty true-downs and had some tariff relief. So basically, they already forecast last quarter that the good margins they had last quarter wouldn't last. Most people who are paying attention saw that. And if you were paying close attention last quarter, or frankly, you were just watching the videos here on the channel or on the course member live streams, we've already been talking about how Tesla is likely to go free cash flow negative. So none of this should have really been a surprise. What was more of a surprise, though, was what happened with energy. Here's the note here on free cash flow, but the problem what we really had was this note here on energy. The energy storage business returned to growth, achieving its second best quarterly deployment number and record deployments. That's great. We like to hear that energy is rebounding, but there's a little bit of a problem here, and we should break down exactly what's going on with energy margins.
Grainger offers professional-grade products, easy reordering online, and 24/7 support, helping procurement managers keep buildings running so people can keep working. Call, click, or stop by. Grainger, for the ones who get it done.
And that's where we get to this page here. The noob says, hey, energy is rebounding massively. We are recovering. Sure, autos might be struggling at Tesla, but at least we're doing more mega packs and batteries. This is good. But the pro looks at this and says, hold your horses here. Average selling prices for industrial storage is coming down. I'm literally reading the words from their executive staff. They also say that long-term margins for energy should stabilize in that 22.5% range. That's significantly lower than the 30 to 35% margins Tesla used to have. And we, in this last quarter, actually saw margins even lower than that at just 20.4%. So all of a sudden, margins are collapsing in energy as well, despite the fact that energy deployments are growing really well. See, if you look at energy deployments right here, you can see that storage deployed rocketed 41%. So the pro looks at this and says, energy deployment's up 41%, that's great. But wait a minute, your revenues from energy only went up 13%. Why are we going up 41% in deployments, but revenues are only going up 13%? Because margin literally collapsed. Margin on energy products collapsed by a factor of, well, a half, essentially. They collapsed in half, from 39 to about 20%. This is a red flag that the pro is looking at for Tesla, saying, wait a minute, this is not good. If autos are slowing down and margins in autos are collapsing, and now we also have margins slowing down in energy, some of the core businesses of Tesla that previously had exceptional margins are starting to falter. Now, that doesn't make Tesla a bad company. There's a lot of good in this as well, and we're going to go through that. So I don't want to sound super negative or bearish here. It's just, there has to be a reason why the stock is down 14% when you actually read the earnings. These are two problems that are very serious. Now, when we look at some of the other components, we get a little bit of a mixed bag of information. The first thing that I'd like to do is talk about something good. Since we've just talked about some things that are not so good, let's talk about something good. Let's go to the balance sheet for Tesla. The balance sheet for Tesla arguably is in a fantastic spot. Now, it's not as cash padded as people like to say for Tesla. Usually when people analyze Tesla balance sheets, they overcalculate how much cash Tesla actually has available. And Tesla themselves actually said that they're taking on another $30 billion line of credit to support their cash expense initiatives when it comes to spending on AI. You can actually see that right here. Take a look at this. So right under this talk
It's
about
crazy, actually.
selling prices declining for energy, we can actually see here, in addition to using our cash for investments, we are opportunistic in securing certain debt facilities that will give us the capacity to borrow up to $30 billion to help accelerate such investments. So, in other words, while they have a good balance sheet, they're also lining up even more debt because they're somewhat forecasting that they're planning on burning some of this cash. And so an investor should really be prepared for that. Let's take a look at the balance sheet. The balance sheet represents about a cash and receivables position of about $47.5 billion. But the company does have about $31.7 worth of bills to pay and about $21 billion of long-term debt. This really suggests the company has enough cash and receivables and inventory, if you want to add that in as well, to easily pay for all their bills and their long-term expenses. But if we're now moving into a negative cash flow generating regime, so we're losing cash flow, we might eventually have to raise some money. And the best time to start establishing your debt is before you need it, because otherwise you end up getting hosed by the banks. Right now, free cash flow is negative $1 billion. If we assume negative cash flow grows to negative $3 billion, they'd have about 5 quarters of cash left. This $30 billion line of credit, 3x's how much available cash and how many quarters of cash they have available. So this line of credit is really smart by the Tesla executive staff. They're going to need it, especially since we're going to see, and I'll explain why in just a moment, why cash flow is going to continue to go negative. It's smart for them to prepare for this, even though it might be desirable to just sort of rely on Daddy Elon to come in with a bailout from SpaceX, who's obviously raised enough capital to be able to bail Tesla out or just acquire Tesla at some point, frankly, which is something that I expect. We've been expecting that on the channel for a while. It's worth remembering that SpaceX stock itself isn't doing that well. From the end of the second quarter, Tesla ended up closing down about 35%. So the stock closed at $167 on June 30th, and that's where they recognized that $1 billion gain. In the next quarter, Tesla is actually going to have to write that gain into a loss. Because right now, the stock is trading for $114 on SpaceX, divided by 167. That means they're down about 32%. So a 32% decline in whatever shares Tesla holds in SpaceX is unfortunately going to hurt, and it's going to show up in their bottom line. And it could actually, where this time really swung them to a big net profit beat, or net income beat, it could actually end up swinging them to a big net loss next quarter, as now they have to write down the gains that they wrote up on SpaceX. A little bit unfortunate about owning so much exposure to SpaceX for Tesla is every quarter you have to say, oh, we gained this, we lost this. You'll see that in Google as well in just a moment. It's pretty extreme. Google's tax is like 4x because of their gains in Anthropic and otherwise. We'll talk about that. But that's their debt facility. That's energy margin, automotive margin. Let's talk a little bit about Optimus. Okay, so here's the thing. When it comes to Tesla, the noob says Optimus robots are going to start getting built this year. This is really exciting and a huge moment for Tesla. But the pro says, whoa, not so fast. Literally in the earnings call, Elon tells us that the initial proportion, or the initial portion of the ramp of the Optimus line and how many they're going to be able to build will be, quote, quite flat and long because of the newness of the parts in the robot. And this is a really big issue because flat and long because of the newness of the parts in the robot. And this is a really big issue because Elon is known for somebody who comes out and gives really exciting.
Strategic financial leadership can transform your business trajectory. Paro connects you with.
When I Googled this family, the words came up were silent dominance, middlemen at planetary scale. All right, Sam, I have a Billy of the Week for you, an MFM classic. This is not just any Billy of the Week. This is one of the biggest Billies in America. One that I wasn't really that aware of. I think you will know more than me about this, but I would say most people don't. Wait, can I guess? Let me tell you three things about it, then you can take a guess. Okay. All right. It is the largest private company in America for the last 40 years.
Mm-hmm.
It is owned 88% by the family and has produced more billionaires in one family than any other company ever. They do more revenue than Goldman Sachs, Nike, and Starbucks combined.
Ooh, is it Mars or Coke?
You're in the right neighborhood.
Estee Lauder?
Okay, you left the neighborhood briefly. Come back to the other neighborhood of like sort of rich redneck families of America. It is Cargill.
Oh, yes.
So the Cargill family. So I didn't really know anything about this family. Can I just tell you a little bit about their story and what they do? Because this is a dominant business story of all time.
Wait, first, tell me, why did this interest you? Why did this catch your attention?
Remember when I was at your house and you were like, there's this closet here, by the way, that we found. There's this extra storage room that we didn't even know until we lived here for 2 months. That's how I felt finding out that one of the most wealthy families in America, and I don't know their story. That's how I felt. As the host of My First Million, I just felt like I needed to right or wrong.
Okay, I understand.
And by the way, how did I find it? There was a Reddit thread that was, tell me about billion-dollar industries that I probably don't know about. And it was like, the first one was sand, and the second one was this, and the third one is this. Reinsurance. Like, well, there's insurance companies, and then they buy insurance. That's called reinsurance. And then the reinsurance, guess what? They have reinsurance companies behind them. It's just insurance all the way down, baby. And so I was reading through this thread, and then one was Cargill, and I was like, oh, Cargill. So what they did, so the story is, back in the day, as America was sort of getting its feet, and railroads had been started to get built, farmers needed to offload their crops, their grain, and they needed to sell them. So they could either sell it individually, so the farm could try to sell individually to a buyer and figure out how to transport it there, or they could work with a middleman. And so Cargill became the biggest middleman on the planet for basically just initially storing grain. So they would go right next to where the railroad is. They would build what's called a grain elevator, which is basically a giant storage facility for grain so that it wouldn't spoil very quickly. And the farmers could come drop it off. They would get like coat check. They'd get an IOU that says, I will pay you when your grain sells. Or they would just buy it at a flat rate, like wholesale, and be able to flip it. So you could choose as the farmer which one you wanted to do.
This is what my father did. My father does for a living, by the way.
So maybe you should have known.
He does it with onions. Onions. But yes, my father's a broker. That's what he does.
Does he store, or he just calls one side and says, hey, I got 75 bushels of
Well, it's fresh produce, so the storage is like a day. But yes,
Okay.
there is a place where they sit for like 24 hours before a truck comes and gets it. Yeah, but yes.
And what's interesting about this for me from a business perspective is you always hear this idea of like, you don't want to be the middleman. Oh, you can always cut out the middleman. And in this case, the middleman became worth more than everybody else. And actually, if you look at many businesses, there's many businesses where the middleman becomes quite a valuable business. And so there's an interesting question of why. And in this case, it's because the middleman was physically in the middle. They literally built the grain elevators that would store the shit right next to the railroad. And so you needed to transport it. You needed to get to the railroad. Who else had it? Like, nobody else was going to build that. So anyways, they started doing that. They then go, further and further and further. So, at one point they're like, hey, these shipping barges are so inefficient where we're shipping the grain. It's not traveling by rail. So we'll build our own shipyard, our own ships. They end up producing ships for the U.S. Navy. They bought the biggest meat, poultry company, and now they control a huge percentage of the meat industry, of the grain industry. And so they built this empire, and nobody really knows them. And basically, it's a family that owns this thing. 88% owned by the family. There's 20 or something billionaires in the family now. They have this rule called the 80-20 rule. So 80% of all profits will get reinvested back in the business. 20 goes out as dividends to the family, and they hire, for the last 20 years or so, that they've had professional CEOs running the company. It's not family run anymore.
And the profit per year, according to Wikipedia, I think it's $5 or $6 billion.
Yeah, that was during the kind of peak COVID stuff when when Ukraine was getting attacked and Ukraine produces a lot of grain, and so their prices spiked. I think it's $3 billion in a normal year right now.
Okay.
So close to $1 billion a year of profit that goes just straight to the family, and it's been doing that for 50 plus years. And so I want to tell you a little bit of something interesting. So first I was like, what do they actually do? Because now when these corporations get so big, so large, they just have their hand in everything, and you would see these comments they're just everything on your plate. Anything you eat in a package, Cargill had a hand in it. They're controlling the food supply. People think of Monsanto style evil companies.
Yeah.
And so just I want to read you this paragraph. So imagine you eat a hamburger. Cargill probably sold the farmer the seed and the fertilizer to grow the grain. They bought the grain from the farmer and stored it at their grain elevator. They shipped it on their barge that they built in their ships that they built to a processing plant where it's processed into animal feed. And then they feed that to cattle who they then slaughter. They then store the meat at their meat packing plants, sell the beef to the restaurant. By the way, the restaurant has to buy their salt. They sell all of the salt to all of the fast food chains in the country. And then the corn syrup that they processed out of the corn gets put into the ketchup. The soybean oil that's used for the fries, the starch that's used in the milkshake, that's all Cargill. And isn't it crazy how one company can have a hand in so much of your day-to-day life? And when you think you're eating at some farm-to-table restaurant, you're really not escaping them because they control the underlying ingredients that are used, the fertilizer, the seeds, the grains, all of it that gets fed to the cows. It all goes back to the source, and isn't that kind of incredible?
And the family is so big and so profitable, they also own a thing called Garda Capital Partners, which is a $10 billion plus size hedge fund.
Correct, because they have to hedge commodities, on behalf of the farmers and for themselves as well at this point.
So they own a little bit of everything, including mines, because they need to get their own chemicals and minerals to make all of these things. This is incredible.
No famous founder. Their office was famously this chateau-looking thing on a lake in the middle of nowhere, and that was it was called the Lake Office if you Google it, and it's just quiet. How they say money talks but wealth whispers. This is wealth whispers shit. You know what I mean? Who's the founder? What does he look like? Who's the CEO? What do they talk about? How come they're not on CNBC? Do they do podcasts? No, they don't do podcasts. You know what I mean? It is true quiet dominance. And actually, it was part of their strategy for a long time was to be quiet about it, just to not attract competition and to build this monopoly position in the logistics industry.
Dude, this is cool. I've seen their logo, and whenever I look at the largest privately owned companies in America, it's always been there. I never understood what entirely they did, because it's one of those things where you say what they do, and it sort of makes sense, but it's like a B2B thing. So like you don't entirely understand exactly what it does. And they say like they sell chemicals, and I'm like, I don't know what that means. You know, that's so vague. But when you look at the numbers, they do $150 billion a year in revenue. That's just so massive. And I bet you that they like own so many more things that you wouldn't even realize. Like, for example, like the Walmart family owns like, have you heard of Rafa? It's like a cool bike D2C company. They own, like, they're just rich people. They're just like deal men. They just own shit.
They just go to the website to buy one, and then they just keep pushing plus on quantity until they own all of them. It's like we now have the shop.
That's hilarious.
Seems like something that this family would do. Is like you
That was funny by Sean.
And then they just keep pushing plus
D2C company.
They just buy the whole inventory to own the company.
They own, like, they're just rich people. They're just like deal men. They just own shit.
They just go to the website to buy one, and then they just keep pushing plus on quantity until they own all of them. We now have the shop.
That seems like something that this family would do.
That's
like,
hilarious.
You don't realize it. And then if you wanted to get like conspiratorial, which I have not done any research on it, I'm sure that there's like 10 or 20 really interesting conspiracies about how that either they're pulling the strings behind, you know, it's like there's something going on with this family, which I have no idea.
A journalist once described the family as secretive, inbred, and suspicious.
I'm in.
All of my friends were there.
Hey, I want to tell you about something pretty cool. We have a database of all of the ideas to what the company. In 1980, they did a survey, and by then it was already a dominant company, and they did a survey. 94% of farmers had heard of Cargill, but only half of them knew what the company actually did. And then amongst politicians, lawyers, and journalists, who they call opinion leaders, 50% have heard of them, but only 10% understood what the business was. Because they have this sort of sprawling empire like you described, people don't really fully understand what they even do. You just sort of know that they're important.
I had a
No,
friend
I'm gonna go
who,
through all these.
I think it was Cargill that she went and worked at because they obviously make so much profit that they were trying to invest in like new seed related, agriculture related, D2C. Like I think they invested, like we had talked about that one D2C milk company. Like they would look at things like that, like anything like interesting. And she said it was awesome working for him. She said it was a great company.
Well, definitely. There's a section called the dark side in my notes here. So let me just tell you some things from the dark side, just to be fair here. When you have like global crop production, you're going to have this, which is like accusations of child labor, like in Brazil or in, you know, Ivory Coast.
And so you will find HTML pages with section elements containing order. Yeah, so that was just to put it at the top.
And things like that. They're said to have better intelligence than the CIA. So basically they have a spy network of around crops. So like they know more about the state of crops in real time than the U.S. government does around the world, because it's like life or death for their business. You know, they've had like different like E. coli breakouts and stuff like that. Again, if you're touching most of the food supply, then like anything bad that can happen in food is going to happen to you. People just generally feel like they're monopolistic. So, you know, they care about worker safety, number one? Probably not. Probably not in the top three things that they care about.
But they're Midwesterners. They're probably really sweet.
But it's crazy to go from like a single grain shed to now controlling 25% of the entire U.S. export market for grains, and it's like pretty crazy.
So it started 160 years ago. You and I did a talk recently, and you were like, we were explaining like some of our preferences. You were like, I like projects. I like starting something and then potentially selling it, but like I love the starting phase. I love handing it off to someone, and then I love it potentially ending and starting something new. And I was saying how I love things that could potentially go for 50 to 100 years. Not that I've actually done that. I've actually done the same thing as you, projects starting and selling. And I'm so fascinated by companies that can last this long. And this one in particular is one that seems like they've kept it together pretty amazingly for 160 years. That's crazy. So they started before the Civil War, and it's still around. Isn't that incredible? And I just find that so fascinating. And like part of me is like, well, when I die, like, why do I care about legacy? Like, we talk about legacy a lot, and I was reading something the other day, and like, someone said, like, why do you care about your legacy? Like, who gives a shit? You're dead. And I was like, okay, yeah, I understand that perspective. Like, we can have the dichotomy of caring about that, and then also, like, how cool would it be that the thing that you can create can employ 160,000 people 150 years after you're gone? Like, I don't know. I think that's awesome. I think it's kind of romantic and exciting.
It's kind of like two people can love running, and one person's trying to run the 100-meter dash, and the other person's running, one of these like ultra marathon 100-mile races, and they're both like, yeah, I love running, and that's what I do, and that's kind of like, in the business sense, there's different ways to approach it. There's the what I call the projects approach, which is you kind of go in knowing like, hey, I'm gonna have like 5 great at bats in my career, and I hope each one is a really fun chapter, and I'm gonna seek variety in those.
It's sort of like being an author. You're like, all right, I got 5 years of research and writing, and then a break, and then I do it again.
Exactly. And then there's other people that are brick by brick laying a foundation for an empire. And, I respect both, but I know which one I want to do. And I think you know which one you want to do too. I think you want the like empire.
Yeah, I don't know if I'm gonna have the grit to pull it off, but I for sure love the idea of the result.
Do you think the people who do this, is it a temperament difference? Like they're wired differently, therefore, fast twitch, slow twitch muscle type shit, where it's more of inherently who you are? Or do you feel like you might have the base wiring to do it, but you then need to adopt the systems, right? Like, for example, it's not like one guy ran this for 100 years. He passed it to his son kind of screws it up, then the next son sort of saves it out of bankruptcy, and then by now, professional CEOs run it, but they've instilled values and systems and like ownership controls, but now the heirs are marine biologists and they're doing other things. They're not running this company but the company, the entity lasts. So where do you think you might fail? Is it the wiring or the systems? Well, it's not like one guy ran this for 100 years. He passed it to his son kind of screws it up, then the next son sort of saves it out of bankruptcy, and then by now, professional CEOs run it, but they've instilled values and systems and like ownership controls, but now the heirs are marine biologists and they're doing other things. They're not running this company but the company, the entity lasts. So where do you think you might fail? Is it the wiring or the systems?
I think the wiring, you start off a certain way, but not always. For example, I think there's a lot of them that would have sold if they could have, but the opportunity just didn't present itself and they just said, screw it, I'll just keep going. And then I think what happens a lot of times is a few things. Like if you had to build a business and you never thought about selling, there's a world where you would do some wacky stuff that would make the business incredibly profitable, but incredibly not sellable. Like you would acquire assets or businesses that don't entirely make sense to one particular buyer. And then you get big enough to the point where you're like, this is a hodgepodge of stuff and it works for us, but no one buyer would ever actually take this. So but then I also think that it comes down a lot to the family. And I think that there's something special around family meetings. We've had Rob Diedrich on here. He talked about that. I actually follow some people on Instagram and they talk about like family meetings.
Explain what you mean. What's a family meeting?
So the way that I grew up is probably very similar to the way potentially you grew up, but the way a lot of Americans grew up, which is your parents never talked to you about money. If you asked them like, how much do you make? They would say like, that's none of your business. And there was very little transparency, and there was probably very little culture creation in terms of like, here's explicitly my expectations of you, here's our family's culture, here's our values. And what I've been learning about, and frankly what I like, is this idea of a family meeting where you get the children and everyone in the same room, monthly, quarterly, annually, something like that. And in the same way you run a board meeting, you run a family meeting where you say like, here's the values that we stand for. Here's how we did last quarter, last month, according to what we said we wanted to achieve. And what about the future? What would you guys like to do? Let's talk about this. And here's the money that we have to spend on whatever dreams and ideas that you have. And let's discuss if it fits within our family credo and mission. And there's actually like a way to do that, and I aspire to do that with my family. My family, we
is like taking meeting minutes.
I just think there's something special about being explicit about stuff. I think that a lot of times when you're growing up, there's these things that you say, well, we never really talked about blank, but my feeling was this. Right. But what I would like to experience is like saying like, we are actually going to speak what we intend to do and how we will do it and what resources we have to get it done, and we'll have a conversation. And I think there's something very special about the families who pull that off.
Yeah, I totally agree. I think it's explicit versus implicit. So it's not even like don't talk about that. It's more just it didn't get said, right? And it doesn't get said not for malicious or secretive reasons. It's just we were busy. I don't know myself what, it's like, I'm not sure I really know the answer to all of these things, and it's easier just not even think about it, right? It's like if you ask somebody, well, what do you really want? Watch people just immediately just start to flounder, because, and it's such a simple question. Don't you think you should know what you really want?
When I'm meeting new people and I want to make them feel like I care about them, it sounds like I'm being nefarious, but I mean, like, I'm trying to like get to know someone. I'm like, hey, in the next 6 months, anything interesting you want to get done in life or career or family wise? And and half the time people are like, I don't know. And it's like the conversation is them discovering it, and it's kind of exciting.
Yeah, exactly. So I think being explicit, I'm like you, I'm an over communicator. I'll take the negatives that come with that because I think the positives are so overwhelming. But how do you do it in a family is kind of interesting. I was at a friend's house, and he has this like crest on the wall, and he's like, oh, that's our like family crest. And I was like, oh, like my family, we didn't have one. Like, I guess my ancestors dropped the ball. He's like, no, like we made this. I painted that like 5 years ago, and we just decided, what are we all about? There's 4 quadrants on the crest, and we said it's this, and this, and this is our sigil. That's our animal.
I love that.
And I was like, you could just do that? You could just be a university? Like, I could be Hogwarts right now? The hell? Like, and I came home and I was like, shit, I'm gonna start doing stuff like this. And so I actually haven't made the crest, but I have done a few other things. Like, I gave for each of my kids, they have like a way. Like, it'd be like Sam's way. So, for example, one of my kids, it's like, one of them says, try and figure it out. Oh, that's the Sam way. And I've said that so many times that now the great father moment is when he'll just be like, well, I just did it the Sam way. And he's using it as shorthand for like, I didn't give up. I tried until I figured it out. And my daughter has a different one.
That's really beautiful.
And then we have one that's like for the idea of gifts. So I told them, I was like, yeah, like everybody has like some gifts that you were given. And my son loves like Pokemon and things like this. So he kind of understands the idea that like you have a superpower, and like every character he watches in a show has like a special power. I'm like, yeah, like, well, you have one too. He's like, really? What's mine? And I'm like, well, yours is that you're this. And I just get to declare, I give them a reputation to live up to. One that they're today quite inconsistent in, but there's moments. And all I did is I just highlight those moments. I pretend the inconsistencies don't exist. And I just keep reinforcing that until it's their identity. And I do that for each of them individually. And then one of the downsides is like, I make one sound so good. I'm like, can I just say that the other one has the same? Because then it feels less special. I have to give the other one equally those. But you can also do... it's a little tricky. It's not perfect, but man, this shit works. It is really powerful. And so there's a version of that that's completely non-business related, but in creating this like family dynasty idea of how do you instill a culture first in the home before you ever try to go do it, in the office.
Imagine being able to build an app with your name on it just by thinking about it. Meet Base 44, a complete AI creation platform. Describe what you want and watch it take shape.
And I think the likelihood that anyone's children will ever want to work in their business is very low. And so, like, if that even happens, I think, and they get along, that's like a miracle. And so what I've noticed, that is important. Also, creating long-term trust. So I talked about this a little bit with the Hearst organization, the Hearst company, which owns like GQ is like a famous magazine they own, but they also own like 100 businesses that you've never even heard of, and including like they own half of ESPN or whatever. And one of William Randolph Hearst, one of his great inventions was he created this trust within the family that was pretty ironclad, and it was very long-term thinking.
Trust like a actual legal trust, or you mean trust like the feeling?
Legal trust. So for example, for him, it was like, you cannot dispute this trust, and if you do dispute it, you're out of the will. And like the trust basically just says that like Hearst, I don't forget the exact number, but Hearst hypothetically will have 8 board seats. Family members are always 2. I think it was like, you cannot argue with how much money you receive. Money is given out equally. If you want more profits, you cannot argue about it. If you do argue about it, you're out. Like things like that. Like he did these things that were quite good in terms of like making it last for a long time. Same with John Rockefeller. He did that the same way. One of the great things about reading about John Rockefeller, he was this madman businessman. Think of Jeff Bezos, a polite guy, but like a ruthless businessman. His son, John, also John, he was a great dad. They were both great. He was a great dad and a great son, and they loved each other very much. And they showed a lot of mutual respect. And so what I'm noticing about a lot of this stuff, it's built on mutual respect. It's built about empowering and having these very explicit conversations. And that was a big takeaway from reading about them.
Yeah, it's interesting. You got to find like these blueprints. It's kind of what I went back to when I was asking you about like the long-term thing. Like you have to get to know your wiring to know where you're gonna naturally have things come easier to you that are difficult for others, and other areas that are going to be difficult for you, and you better figure out how you're going to work around it, either by patching up those weaknesses or getting people around you who complement those. And then you got to learn the systems, you know, on top of it. Like, what are the habits? What are the actual systems on top of that to get the results I want?
But then there's like a wild card. Like, for example, I have a billionaire friend whose son is a homeless drug addict. Like, they've tried numerous times to get this kid on the right path to the point where they're like, we just got to let you figure it out. And unfortunately, that might mean death, but like it's a very challenging, tragic situation.
The family crest didn't help?
Yeah, like it's pretty crazy. You can have, I think, what's the phrase? You're the happiest of your saddest kid.
Yeah, you're only as happy as your saddest child, yeah.
I went on this rant about like phrases and why they're really important, the phrases we tell ourselves. So for example, like using the phrase like, I might as well, where it's like, well, I've already eaten bad today, I might as well eat. It's like, no, that's just a convenient phrase. You should not might as well do that. Right. Or
it is what it is my favorite one. It is what it is the complete surrender of power, of agency, of anything. It is what it is. Just replace it with, just say, it is what I make of this. So then you say, all right, well, what am I going to make of this? You know, like, it is what it is crazy.
Can I tell you about a phrase that you're unfortunately need to know about and you're going to see everywhere online? I also want to rebrand it. So this thing, it's called the Jevons Paradox. Have you heard of the Jevons Paradox? It's not even a paradox. A paradox means like, an example of a paradox is like, can God heat a burrito so hot that even he can't eat it? Like this is more like
what is that paradox called? The paradox?
That's a paradox. This isn't even a paradox. This is just like a
that's so
like
funny.
An economic like principle.
Okay. Here, let me read it. Let me read the actual definition. An economic principle stating that as technology makes use of a resource more efficiently, the total consumption of that resource actually increases rather than decreases. Okay, so as something becomes more efficient, you would think you're using less of it because you're being more efficient, but in total, you use way more of it because the demand explodes. Okay, go
And
ahead.
I'll give you a ton of examples. I want to rebrand it to Jevons Paradox because
give it a little flavor.
Yeah, well, because it was created by this guy named James Jevon, who was a British guy, and I think that it'd be cool to have a wonderful economic principle be created by an American brother. So I want it to be one of ours, not one of theirs. So right around the mid 1800s, James Watt creates this new thing. It's a new variation of the steam engine, which is basically the steam engine that like everyone came to love and know. James Jevon was basically this guy in the 1800s. He wrote a book in 1865 called The Coal Question. And he basically says, I have a feeling that because of how amazing this new steam engine is, that Britain potentially is going to get rid of all of our cheap coal and we're going to have a problem. We're going to have a coal shortage because everyone else was like, what are you talking about? The steam engine makes things significantly more efficient. Therefore, like, there's only a set amount of work needs to get done. Like, we're just going to use less coal. And he goes, no, brother, that ain't going to happen. We're going to use way more coal because everyone's going to want one of these steam engines. And he was exactly right. And this is where things get really freaky. And this is actually what I want to talk about. It expands in a way that you cannot even comprehend. And so let me give you a really simple example. Eli Whitney, he was this guy from Yale, and he was like, I want to make it rich. I have this idea. So he goes down to the south of America.
He made the cotton
At the
gin.
time, slaves would pick cotton, and they would get cotton, and it would take them hours to separate the seed from the cotton to the point where they could only produce about a pound a day of cotton that was usable, one person. And he comes up with this little handheld device where you can kind of like put cotton in there and kind of cranks it, and it gets the seeds out to the point where one slave could produce 50 pounds of cotton. They made it 50 times more efficient. And so some people were kind of happy in a weird way. They thought, okay, maybe this might mean slavery won't continue to grow and that like we won't import more slaves. That's kind of good.
This is a great parallel.
The exact opposite happened. Over the next like 30, 40, 50 years, cotton got so cheap that in the south of America, particularly in Mississippi, where a lot of like slavery eventually got really bad, they actually started calling it King Cotton instead of King George. And so America's best export was cotton, and it got so strong that we had to import like 8 to 10 times more slaves than we currently had at that point pre Eli Whitney in order to keep up with all this demand for cotton. And one could argue that the reason why slavery in America lasted as long as it did was because of cotton and the demand, and that's one of the reasons why it was like our economic engine. And so this idea of this paradox, it's quite strong. And so the reason why it's relevant right now is because what's one product that AI is making significantly more efficient? Code. Previously, code was very expensive to make. So you have to raise all this money from venture capital, you have to hire all these engineers, you got to make stuff, and hopefully 3, 5, 10 years that code is actually working and makes a profit. Well, Javon's paradox, it comes into play here because my opinion is this. A lot of people are saying that AI is going to put people out of work. I think it is the exact opposite. I believe that code will get more cheap, therefore demand will increase a significant amount to the point that we can't even understand. For example, Gutenberg invented the printing press. When he invented the printing press, people were thinking, maybe people will read like 2 times, 3 times, 5 times more books than they're reading now. And Gutenberg, this guy, creates this printing press, I believe in the 1400s, and the offspring of that,
1455.
on the extreme end, is this idea of the Kindle. One could even argue that like reading text on a page, like on a computer screen, is like a way further down. But like it didn't make 5 times more books. It made like it's infinite. Like it doesn't create like 10 times more. It's like it creates a whole new thing. What I have noticed this with the cotton gin. I've noticed this with the creation of the steam engine, which went to create the railroads, which created a massive boom in America. When technology makes a product that already has some demand more efficient, there is turmoil amongst those who are directly impacted. For example, have you ever heard of the Luddites?
Yeah, people who don't adopt technology.
Yeah, so now it's used as an insult. Back then it wasn't. So the history of the Luddites is basically right around when in the Industrial Revolution, there was a machine invented that allowed people to weave wool into yarn much faster. Previously, there was like 500,000 or 800,000 people in England who did this by hand, and they were considered craftsmen. This new machine comes in, they get put out of business to the point they create a fake character called Ned Ludd. And in England, this group of people go around smashing these new machines, and it starts ruining the process of creating this new like wool to the point.
And they were like on behalf of Ned Ludd, right? Like a person that you couldn't attack because he wasn't real.
It was a fake person, and it was so serious that it was a capital punishment in England. So if you got caught breaking one of these machines, they would put you to death. And so this idea of like there was like 500,000 or 800,000 people who are willing to risk their lives in order to ruin new technology. That's like the history of Luddites. But my point being is when there is a new creation, there is a subset of people that are screwed. For example, when switchboards went away in America, in the 1970s, there was like 800,000 telephone operators, mostly women. They didn't exist. Those jobs didn't exist. But in general, more technology that creates a more efficient process creates new jobs, sometimes because of increased demand. Sometimes the other thing is that because there's new industries created that we can't even comprehend. And so my opinion, AI is actually going to create a net positive, not a net negative, which I previously thought.
My meeting notes went from this to this after I started using Granola. I'm in meetings all day, and trying to take notes during calls and remembering to follow up on everything after really slowed me down. That's why I switched to Granola. All I do with Granola is jot down notes on the important things during the call, and then after the call, it turns it into a full recap that's nice and clean, and I can send it right off to my client. And the best part is it never joins the call like a traditional meeting bot. It's a lot more passive than that. I'll leave a link so you could try it today for free.
This summer, get 80% off hosting or unlimited. One AI-powered plan with everything you need to build your website, launch your idea, and grow online. Get unlimited websites, unlimited emails, priority support, and more, all in one place. No platform switching, no extra subscriptions, no complex tech. Go to Hostinger to claim your unlimited plan today.
First of all, excellent monologue. Highly informed, highly entertained. I enjoyed that. You told me you were reading about the Industrial Revolution because you were trying to figure out, like, history doesn't repeat, but it rhymes. What happened in the past? What did we say? What did we think then? Does that sound like what we say and think now? And what actually happened?
Yeah, like one that came out like 10 or 15 years ago that's now popular again that I read a while ago is called Americana. And it goes through breakthroughs in American capitalism, so like different inventions. And you'll notice that people have the same fears consistently.
So let me ask you a different question. One of the most dangerous things in business is to think, well, this time it's different. Those are very dangerous words. This time it's different. However, it's also dangerous to say, it'll be just like last time. You have to almost consider both possibilities.
I'm not saying that, by the way. What I'm saying is that human nature is human nature, and there's something special about the 30 to 60 hour a week work week that has happened for centuries, and also time and time again. There's this idea that I always come back to. I used to be a beekeeper, and bees are really interesting. With bees, if you get one hive with one set of bees, you just stack that over and over and over again. Bees fill up space. They just fill up space. And the same way, whenever you've gotten a new home, anyone has experienced this. They get to this new home, they previously only had 1,000 square foot. They get to a 2,000 square foot, they say to themselves, I'm never gonna fill this place.
Yeah.
And then magically, over the next 3 years, they go, how do I have so much junk? That is the human need to expand, to grow, to fill space is innate. It does not go away. And so that is what I'm saying is the same every single time, not the how. I don't know how this is going to happen. That's sort of the point of my monologue, is that I don't know, but I know it will happen.
Yeah, and not to be too abstract here, but the one thing I don't get, or the one thing I haven't figured out with that, I buy everything you said. All this new demand will get created. We'll want code in places we didn't have code. So yeah, it'll be more efficient to get code, but net you're gonna have way more code, way more people creating code. In this case, if AI is so good at doing things, like AI is a technology that basically is the technology of doing work, like generic work, human work. It's like basically a model of the brain. Like, who's to say that AI won't also fill those jobs? Meaning, like, yes, it creates all this demand, which creates new job opportunities, new industries. But who's to say that AI also isn't the one who supplies that demand also? Because, you know, the printing press, these were more rigid technologies that could do one thing. AI is weird in that it's this like flexible general thing that can do so many things. So who's to say it doesn't also become the supply?
There's a few ways to look at this. The first is like, you could say, well, is this going to be like hot water? So for example, when hot water was invented, this idea that you could like take showers every day like a king, like that was incredible. And so hot water surged and water heaters were put in every home in America. But you know what happened? We sort of figured out how much hot water we need. Like, we don't actually need that much hot water today than we did like 50 years ago. So it took off and then it kind of got flat, right? But code is going to be like that, where it's going to be a unit, a measurement, where you can find infinite ways to get done
this
what you
might
will
be
need to
true.
get done. And I do not think that it's going to be like water, where it's going to be like, all right, we figured it out. We don't really need that much more hot water.
Well, why are you saying code instead of like intelligence?
I'm just kind of working through this, to be honest. Like, I'm so like, but I was trying to think of like, that's like a unit. Intelligence is, I don't understand how to like quantify it. But now this is actually interesting to you potentially. There is always a point of turmoil with these new technologies. And I've been trying to actually break down, is there like a formula that you can figure out, will the economy boom? Or I think it will, I think that's inevitable, but like how long will it take? So for example, the railroads came about, and there's like this weird chart that if you look at like how many railroad tracks were laid and how the average person's protein consumption went up. Because like what the railroads did was they made America smaller, and it created like towns that didn't exactly have to be where they were anymore. And it created this massive like booming economy. However, it took 50 years because we had to create railroads, which is a very labor intensive thing. We had to create steel, which was like entirely new invented. And so there's this equation where it's like the breadth of the technology, meaning how many people does it impact, multiplied by this like the intensity of how it impacts you, multiplied by like the time of co-invention, and that equals like the length of turmoil that someone will go through. With ChatGPT growing as fast as it has, there is a world where the tumultuous period is relatively short compared to past breakthrough technologies.
They say higher education is outdated, irrelevant, but at Grand Canyon University, we shatter the status quo. GCU's accredited MBA program is 100% online and is designed to shape leaders through servant leadership.
GCU can help take your passion and scale your business to serve your community.
This is purpose-driven education. Take action. Find your purpose at Grand Canyon University. Visit gcu.edu.
Yeah, this one's crazy, is it? Okay.
And if you knew the turmoil, either when, how, or how long, what would you do with it? Because you said there's like an opportunity. What's the opportunity?
Like if you knew that like the like it's only gonna take us 3 to 5 years to like figure this thing out to where we're humming again, that you can make bets on that.
Yeah. Actually, you know, one of the kind of Jevons paradox plays over the last few years has been NVIDIA, because what a lot of people thought is, hey, people are buying these GPUs, but each training run, each algorithmic improvement that the labs are making is going to make you need less and less of these GPUs in order to train these models. And Jensen went on TV saying he was like, you're right, the training is going to become more efficient, but the inference is going to go up by 1,000,000%, or whatever, 1 million X. And people were like, 1 million X? And he's like, 1 million X. And it's kind of what you were saying at the beginning, which is that when these
I'm gonna go eat soon.
do diffused, the demand goes up, not by
Oh, it's only been an
some
hour and a half.
kind of easy to understand percentage of multiples, but like in a mind-boggling way. Where, you know,
I got
from
another
the time of
hour
the
and a half
printing
in
press
the-
to now, like if you were trying to market size how many people will create text and how many people will read text, you couldn't have thought of Twitter, right? Twitter would have broken your brain. It didn't make any sense, but that's kind of what happens. And so he's been saying that about inference, which is like when you query AI, when you use AI to do something, you use inference. And he's like, inference is going through, is basically, people don't understand like how big the inference need is going to be for the world. So, you know, mind-boggling.
I think what's going to happen over the next 6 months is, and this is partially for listener, because I think you potentially might know this, is I think the popular smart people, which I think we're relatively popular, I don't think I'm that smart, but I think the popular smart people, the narrative is going to change. It's not, and this is, and it's self-serving to have this narrative, particularly if you're a president or whatever, but the narrative is going to change, that this is going to be a massive net positive, and they're going to cite Jevons paradox, and they're going to cite everything that I've just said, which isn't particularly unique, and nothing I'm saying is unique.
Dude, I see this all the time. It's like, yeah, this is going to be great for you if you make it great for you. I think people are just sitting back as like the recipient of this, and it's like, is this hand going to slap me, or is it going to put, you know, grapes in my mouth? And it's like, well, it depends. Like, it depends what you do. Are you learning how to use this shit? Are you paying attention to what's going on? Are you thinking about how you can use this in your field? Are you talking to smart people? Are you moving where the puck is going or not? Like, I feel like people are so passive about like what's going to happen, as if everything is happening to you, and that none of this is happening potentially for you, and that you have no agency to be generative in democratizing technology for yourself.
The reason I was studying the Luddites is I think that same movement is already happening right now, and it's going to continue to happen. You know, you saw like at this recent college graduation speeches, like Solomon, I forget his first name, Solomon, the CEO of Goldman, was like talking about AI, and everyone was booing.
Yeah, people walked out, right?
The reason I'm bringing this up is if you go back and study the Gilded Age, which that's one of my favorite eras, as well as the Industrial Revolution, it's all just repeats itself. Everything's repeating itself. It's like it's very, very, very similar over and over and over and over again. This is all quite predictable. Now the time and the how is who knows, but like the general trend, it's all been there, done that.
Yeah. That's crazy to me that it's become like a high status thing to do, to be anti data centers and AI and things like that. It's like really
But that's
bizarre.
not fair. I don't think that's fair. I don't think we should dismiss it. I think they're stupid. I understand their sentiment. Can you imagine being 18 or 21 years old? First of all, if you're 21 years old, you fucking graduated high school during COVID. That sucks. Okay, the world changed dramatically over the last 4 years, to the point where you were expecting to get a job at Deloitte or as a law clerk or whatever, like, you know, and they're like, nah, we don't need you, dog. Like, there is anger, which I understand, but I think that the way that they act
You're
is
asking
dumb.
me to put my mind in the mind of a loser, and I just can't do it. It's just not possible to do this. The loser think is just not acceptable in my mind, and I'm sorry. I just don't have the ability. Maybe you can. Maybe you can go in the mind of a loser, but
I think they're wrong, but I have empathy for it. I understand that feeling, and I think they're stupid. Dude, there was one point where like ATMs had just gotten invented, and these people who were like the bank tellers,
Bank
was like
tellers.
it was like a big deal. That was like a big job, and they revolted. They were like, "F this! You're gonna put us out of business, this or that." And do you know what happened? Way more banks went up. Way more banks were created, or branches, like physical locations. Way more. And so I just think if I'm telling these young people, I would say it might suck for a minute.
Dude, if you're young, you have no excuse. Okay, I can get it if you're like 65 and you're 75 years old or whatever, and you're like, oh my God, there's a lot of change. It's going to be really hard. I've been running my business. It's pretty difficult for me to reinvent right now. Like, I have a lot more understanding for that. If you're 18, 19, you didn't know anything anyways. You know, hop on this train. This train is exciting. This train has like so much room to run. You know, you sort of have to look at the counterfactuals, right? So you might say, well, it's going to be harder than ever to get a job or this or that. It's also true that more people than ever are going to create new things. More people than ever are going to become successful. More people than ever are going to become millionaires out of this. And so it's entirely possible to have that result if you choose, if you do the actions that will get you to that result. So I guess I just have very little empathy for like the younger folks. This should be easier, come more naturally for them. They have less invested and less sunk costs and less rigidity of the past to even like be tied down to. So I don't really understand that. And the other side is like, is this serving you? Like, is that attitude serving you in any way? Is like, forget arguing who's right and who's wrong. Like, at some point, you just have to ask, does this belief serve me or not? And I don't believe that belief serves you. I also don't believe that you can control it. Just like Ned Ludd and the Luddites found out, it didn't matter how many windows you smashed. This shit's happening. It's like getting mad at the weather. It's like, it's gonna rain, whether you shake your fist at the sky or not. Like, you have zero chance of slowing down AI. The AI freight train has left the station. It is happening. And so all you should really worry about is what you can control, which is your reaction and response to the new playing field. Trying to argue that the new playing field is bad is sort of stupid to me. It's like, again,
Omitting
like yelling at the weather.
HTML
Hey,
and
you don't get to have a say in that side of things. The New York, who is it, the governor, the mayor, whoever it was, that was like proudly like, we have banned data centers in New York State. They were like so happy about it. You know, politics is already very performative, but like, man, taking so much smug pride in like banishing the technology that's going to create where all the growth is coming from in the economy is sort of you know, silly.
And one that's being popularized now is data centers use electricity and use water. And I actually have no idea if that's true or not true. But whenever I see these things, I'm like, we should actually learn if that's the reality, because I have a feeling that like the Super Bowl is significantly more inefficient than a data center, and yet we celebrate that. Like,
anybody who has this feeling and you're like, man, Sean's really not empathizing with this guy's being a jerk about this. He doesn't understand how hard it is right now for me. Just watch this clip. Just need to watch this clip of this guy with no legs completing the last man standing race, which is like this insane 26-hour fitness event, and he's crawling, he's pulling his wheelchair through the mud using his arms, finishing this race. And anybody who's got an it is what it is attitude, go watch this on loop. This should be your commencement speech instead of, you know, just sitting there smug and walking out of it because some guy said 2 letters you didn't like.
I usually think of Sacagawea and Lewis and Clark. That's mine.
In moments like this.
I think, look, they walked across an unknown territory for 2 years with a 3-month-old baby. They could do that. That baby still lived. I can do this.
That's what I need. Actually, that should be a service when you're in Disneyland as a dad, and it's like hour 7, and it's so hot. The kids are crying, cranky after you spent $1,000 taking them to the happiest place on earth, and you're pushing the stroller, and you've got the turkey leg dripping down your arm, the juice of that thing, and you just hate your life. You need the Sacagawea example.
Yeah.
That's
You're
what
like,
you need.
look, kids, the story of Moby Dick is real. These guys floated across America on a raft for 90 days before they were discovered. Okay? If they could do that, we can get to McDonald's without crying.
Can I tell you a very inspiring entrepreneurial story, just to leave on a high note? Have you ever heard about the Ice King? Frederick Tudor, you know this guy?
Not personally.
All right, so Frederick Tudor. So this guy's known as the Ice King. This guy basically, he lives in the northeast of the U.S. So he lives near like Boston or something where it gets cold. And Boston gets cold in the winter. There's tons of ice, and he learns that in South America they never have snow, and they never had ice. And so he has this brilliant entrepreneurial idea. He's like, I'm gonna sell ice to the South Americans. And this is pre-refrigeration, pre the freezer being invented, right? Okay, so he's basically goes out wherever there's like a frozen lake, and he would get blocks of ice, and he would figure out how to transport it on boats to South America and go try to sell this stuff. And he was like, I'm not selling ice, I'm selling winter. And people are like, how are you gonna even melting? He's like, so he starts getting in the lab, and he uses wool to wrap that. He realizes like, oh, I can cover it with sawdust, and sawdust will preserve this ice for like a little longer. And he would start the thing with like 200 pounds of ice, and by the end, he would have like 70 pounds left, but he would still sell that 70 pounds. And then when he got there, people didn't understand what to do with the ice. He would sell the ice, and then people would come back complaining, being like, it melted, dude. He's like, what are you talking about? That's what it does. It's ice. It's hot outside. Like, they didn't get it. And he's like, okay, I just got on this boat for like a month and brought them ice, and they didn't want it. I have to get them to want it. I have to build the desire in their mind. And so he goes and he figures out, what's the key product? What's my hero product here? He's like, I need to sell cold drinks on a hot day. So he goes to the bartenders and he says, look, I'm going to chip you off a little ice here. This is free for you, but you need to start serving rum cold in a chilled drink. And so he gets the bartenders free ice. They start giving people ice out of cold drinks. And guess what? Once you've had cold rum, you never want to go back to that warm piss again. And so the demand starts to get built. People start to want ice. And this guy builds this amazing trade. He pioneers new methods of refrigeration and freezing in order to transport the ice, and ultimately puts himself out of business because people realized, oh wait, we can just freeze water and make ice ourselves, and then the ice trade kind of collapsed. But Frederick Tudor for a day was the man.
I'm also always interested how you got interested in this, because sometimes those stories are equally as good.
So me and Diego, who's right over here 5 feet away from me, one of the things we do is we try to read as many books as we can. And so he's been reading this book called The Medici Effect. So this was one of his stories, and I was like, wow, that's an incredible story.
I'm happy you're reading books now.
That's condescending, but I like it. I appreciate it.
I did not say that. I mean, I said what I just said, but you previously said that you normally don't make it past the table of contents.
I think you said that was one of his stories, and I was like, wow, that's an incredible story.
I'm happy you're reading books now.
That's condescending, but I like it. I appreciate it.
I did not say that. I mean, I said what I just said, but you previously said that you normally don't make it past the table of contents.
I
think you said that.
I buy the book with great enthusiasm, and I really don't even open them. I've actually, you'll appreciate this. I'm creating a bookshelf, so you'll see my office is going to change soon. I'm creating a bookshelf that is like a Trello board. So it's basically a progress bar bookshelf. So I have all the books I bought, that's my icebox, my pipeline, and then a book moves into like the reading phase, and then it moves physically into the completed phase, and then there's the Hall of Fame of like great books, which will be like the few, the rare, the ones I would actually recommend to anybody else.
It's sort of like one time Steph Smith told me she invented a water bottle that reminds her to drink more water, and I was like, just chug.
How's it going? First day, so sometimes
Next.
Try again.
You could have done better.
Please.
The same goes for where you invest.
Using style sheet.
Level up and invest smarter
Type
with Schwab.
attribute.
Imagine being able to build anything just by thinking about it. Meet Base 44, a complete AI creation platform made for anyone with an idea and a drive to bring it to life. Describe what you want and watch it take shape. You can plan, customize, and expand in any direction. built for one to platforms ready for many. From passion projects to enterprise-grade systems, everything is built in and ready to launch. It's a new world of creation, where you can go as far as your imagination takes you. Can you imagine it? Let's make your dream a reality right now.
The water. Just sit down and read the book. Like,
Are you sure? My bookshelf not being a progress bar has not been the thing holding me back. That's what I've been telling myself. So my old boss, Emmett from Twitch, he would tell me this because I have a tendency to do this where I will over-architect a solution to something, and I will convince myself that like this elaborate way will be the solution instead of the obvious. And so he would just listen to me talk, and I would tell him for 15 minutes what this great idea I have. And then I'd be like, it's great, right? And then he would say, simply, he'd go, have you tried solving the problem? He's like, and then have you tried actually just solving the problem? And then he would say things like, the only way out is through, Sean. And I was like, oh, wow. I was like, yeah, I'm kind of an idiot. He goes, no, actually, he goes, I'm a partner at YC. And this is the most common advice I give to YC startups. They'll say exactly what they're planning to do, and then I'll ask them, have you tried solving the problem? Then they'll be like, what? And it's his like shock value way of reminding you that like in many situations, the only way out is through, and you're trying to find a way around. There is no around, there's only through.
I waste so much time like charging my AirPods, looking for the holster to hold my iPhone, making sure that I'm like, dude, you're just going for like a 30-minute run.
I did this the other day. I was going for a run. I DoorDashed, you know, the little arm plastic like blood pressure monitor where you put your phone? Yeah. And I was like, well, I certainly couldn't run without my phone. So I guess I'll just wait 45 minutes for this thing to arrive.
Dude,
before I go
15-minute run.
4-minute run. I was going to run half a mile.
I do the same shit all the time.
It's one song. I could have just hummed it.
What was it like? Come, my lady, come, my lady, you're my butterfly. Shots like running, like, is this guy singing Hoobastank to himself?
Why do people listen to us? Why do they listen to us?
That's the pod.
Arial Black, Helvetica, Sans Serif.
Bubble, but people will say, oh, it's an OpenAI bubble, not an AI bubble. OpenAI is the AI bubble. So we may see within the next year a situation where Clammy Sam Altman, Clamuel himself, ends up genuinely destroying Larry Ellison. The difference between everyone else and Oracle is that they have done the smart thing of not building as fast as Sam Altman demands. And I think we're going to see the people that got harmed the most are those who trusted Sam Altman the most. And when this all falls apart, I genuinely think there's going to be an authority crisis where people look at the media and go, hey, why did you believe every insane thing said by a CEO for 4 years?
Hi, my name is Isaac, and on the Tech Report with me is the writer of Where's Your Head At and the host of the Better Offline podcast, Ed Zitron. Thanks for being here.
Hello, Isaac.
We've got to get into the Oracle having its credit rating downgraded to one level above junk. But before we do that, Wall Street Journal has reported that potentially one of your AI bubble horsemen may have arrived. The data center owners are trying to sell majority stakes in several operating companies worth tens of billions of dollars. What do you make of that news, particularly the fact that it is majority shares?
I think it's them trying to cash out the top of the cycle. I think it's them. They know that they've built enough to flog it to someone.
You've even got Lancium, the owner of the land underneath of Stargate Abilene, trying to sell a minority stake. They're trying to cash in because they know for a fact that things are slowing down. Stargate Abilene still only, I think, 4 buildings max built. I don't even think the 4th one is operational. So they know that eventually it's going to become obvious these things aren't getting built. But as long as the mania is still there, and the mania is subsiding a bit, they're trying to get the money they can out of it now. Makes you wonder why they want to sell it off, though. I thought AI was meant to be the biggest thing ever. It was going to keep growing exponentially. Why now? Why not wait until, I don't know, any of the things are actually finished? And it's interesting, forgive me for not having the details in front of me, there was a weird Blackstone situation where they had to they ended up selling off part of a data center, a full data center operation for like billions less than it was worth. And I think we're going to see more of these. I think we're going to see more attempts to try and get out of these data center
I gotta go get a
projects
massage. Holy
before
shit.
the bubble bursts, whenever that may be. It will happen though. And I think we're going to see it happen increasingly because right now, I think the reason the money's flowing like this is it's taking so long to build them that anything that looks even half built is very attractive to those who don't want to think about the other side of why the others aren't getting built or what's going on or read anything other than things that approve their biases.
So the narrative from the other side of things is that these aren't exits. This is more of an attempt to sort of hand the keys over to someone with bigger pockets to fund the infrastructure costs. I know the answer is that you probably don't believe that, but what do you make of that narrative?
That's just saying the same thing with different language. Yeah, it's not selling everything, it's just giving everything to someone else for some money. It's not that we're getting out of it, it's just we're leaving it to someone else so that they can be in it and we will be out of it. It's not that it's bad, it's just that we don't want it and we'd like money instead. And it gets back to what I was saying, it's why is it that they're leaving at what should be only the early? Jensen Huang the other day said we're at the beginning of the cycle. Why are you getting out at the beginning of the cycle? It just begs the question of why they're leaving. And I mean, there is just taking out my own thoughts about AI for a second, there is a certain amount of just basic business here. Just like, yeah, you have something worth a bunch of money, someone offers you a bunch of money, you sell it for a bunch of money. It may not be directly AI connected, it may not be bubble connected, they may just say, okay, we've got an asset that's appreciated, we're getting out. The fact that Lancium was getting out of Stargate is so strange. That one got covered by, I forget where they covered it, but it was very recent that they were doing that. That one makes me think that everyone is trying to find a little bit of, they're trying to find their ways out, because remember, we are meant to, if you believe the AI boosters, we are at the beginning. We are just at the beginning, where these are AI factories building the future of intelligence, right? Why now? Why now? It's just, that is the question to ask. Sure, it could just be raw, unemotional capitalism, or it could be more emotional capitalism of, yeah, I'm gonna get out of this before something bad happens.
The banks are supposedly trying to sell this primarily to private equity. And I mean, a lot of people will know that private equity firms have a bit of a reputation, especially if you know anything about Toys R Us, that kind of saga. What happens if these majority stakes are sold to private equity? And also, kind of the opposite question of what you were saying, why are they buying in at this point?
Well, we start with the fact that private equity is in a losing streak and has been since 2021. They massively overinvested in software companies between 2018 and 2022. This is just classic private equity stuff. Private equity, as a thing, craves places to put its money. They raise funds, they invest funds from private credit sometimes, which is also scary. So private equity taking over a data center, depending on who it is, takes a bad situation, makes it much worse. Because private equity, as you said with Toys R Us and tons of other examples, I mean, car washes is another example. Like, if you ever see a business just randomly deteriorate out of nowhere, that's why private equity bought it. But that's the thing. Data centers are, or remember, the concept of an AI data center is very new. Really, the kindest you could say is maybe about 6 years old at this point. The A100 GPUs, the very first NVIDIA GPUs that really did AI loads, 2020, after the Mellanox acquisition. We've got 6 years. So already, the people building these things are already not particularly experienced, just because they're not, they're new. Then you hand it off to private equity, who is well known for rushing things. And the problem is, when you think of a data center, even a 100 megawatt one, it's like building a small town and powering a small town. You can't half-ass that. So giving it to the half-arsing consultants is probably a problem. And private equity also runs on debt. They love debt. I mean, they need debt. They buy these things, they pump full of debt, they try and run them cheap and then make lots of profit. The problem is that they're buying data centers, which are very hard to turn a profit on. So I think it's going to be a situation, if private equity ends up holding the bag here, it would make complete sense just because that's exactly what they like to do. And I think it just ends in tears for everyone, because even the people who have some experience building these things are, I don't know, they're not doing so great either. And so I'm not really sure how this ends for private equity other than in tears, or they try and sell it off to each other, which we kind of see with they do these things called continuation funds where private equity firms sell their own holdings to other PE firms. I think we might see some pass the parcel with that, but that assumes we get that far. I haven't seen a massive uptick of PE firms buying yet. That doesn't mean it won't happen, and especially with these majority and minority stake selling, yeah, those are going to be the buyers. They're going to be the ones, because they're the only ones that could sell their dim-witted investors on it.
Do you think that private equity firms and the people funding them are bought in enough to the data center hype, the AI hype, to actually, because this is all just offers, this is all just, we're trying to sell it to private equity rather than them buying it yet. Do you think, I don't want to say do you think they're dumb enough, but are they dumb enough?
Yes. Look, private equity, like I said, private equity craves places to put its money. A PE firm must deploy its capital. Generally with how it works, I think it's the first few years they deploy, then the next few years they puff them up, and the next few years after that they sell. They ideally have a 7-year life for funds, but it's increasingly becoming 10 years. I think PE firms will do this. I think that they're probably already doing it to some extent. And the reason they will is they can sell this, even though this is a complete misunderstanding of everything, they'll sell this as stable infrastructure, the equivalent of buying like a power company or, I don't know, a group of warehouses or what have you. They will think that's what they're doing, and then they will sell it and say you are buying AI factories, and then everyone will lie to themselves. And, oh, AI factories, brilliant. This sounds really real. It's not real. It's not real at all. It's actually just, it may end up being the worst investment from private equity since software companies.
Let's move on to Oracle then, because like I said at the start, their credit rating has been dropped to 1 below above junk. And sort of, what message does that send? Quite obvious, but if you could spell it out. And then, what does it actually really mean that it has dropped?
So here's the magical thing. Usually, when I'm talking about stuff in the AI bubble, I have to find a way to frame the data in a way that explains what I'm saying, and I have to be like, no, I think this is suggesting. S&P Global did the work for me this time. They directly said that the reason that they downgraded Oracle to one run above junk was OpenAI, specifically OpenAI, as in OpenAI is the reason. Much like SoftBank got a negative outlook, Oracle actually got downgraded. The reason this is happening is Oracle is building about 7.1 gigawatts of data centers for OpenAI, costing about $340 billion, but I made that estimate months ago, so it's probably more like 350, 400, if not more, $billion. And it's for a $300 billion, 5-year-long contract that just started a month ago. But the only way they're getting that $300 billion is if Oracle builds the data centers, which it's not going to happen. I saw on the wire recently that they tried to get a pipeline to their New Mexico data center, I believe, that got turned down, a gas pipeline. So Project Jupiter probably delayed there. That's one of the many data centers. Point is, Oracle needs to build these things, then OpenAI needs to pay for them. OpenAI cannot pay for them. No one can. In fact, so I estimate that, let's say Oracle magically built these data centers overnight. It would cost about $70 billion in annual revenue. It would give them that even. That's about how much Microsoft Azure makes, all told, so probably not going to get that, especially not from one company, OpenAI. So the downgrade also had another reason, which is that in Oracle's own annual report, they said, I'm paraphrasing, we may not get paid. We may not get paid by OpenAI. And if we don't get paid by OpenAI, no one else will pay us, or someone else will pay us at a discount rate. You can't be saying that, Larry. People get nervous. But this is actually the biggest story in the AI bubble, in my opinion, Oracle. Oracle's business has been plateauing for 10 years. It's a mythology about the company that they are profitable, but that they're this massive, ever-growing business. No, Oracle's regular database hardware licensing and all that has been kind of plateauing or declining for about a decade. The only thing that's growing is AI compute. Now, here's a problem with that AI compute. It's eating their margin for breakfast. In the last 3 or 4 quarters, their gross margins dropped by 15%. And that's because AI GPUs are expensive to run, expensive to build. It sucks for everyone involved. There really is no good way this works out for Oracle. They're not building 7.1 gigawatts of capacity in the next 3 years. That's insane. They're not going to do it, which means they're not going to get paid, but again, they spend all the capex anyway. It's always going to be eternally in progress. This is a huge issue because what do you do about a business where the regular business is dying or plateauing, just in a flatlining, and the other one, the only one that's growing, is growing but losing you money? What do you do there? That's a bad business. And Oracle is just putting all of its eggs in Sam Altman's basket. And OpenAI, I've said it this week, they're the Lehman Brothers of AI. We are in an OpenAI bubble, but people will say, oh, it's an OpenAI bubble, not an AI bubble. OpenAI is the AI bubble. If OpenAI fails, or even if just the market believes that OpenAI will fail or cannot pay Oracle, Oracle is in the toilet. Because there is not another entity on Earth who can afford to pay for Stargate. No one. Microsoft could divert all of their free cash to paying. They're not going to do that. Oracle cannot even afford to build the rest of Stargate. They're having to take out a bunch of loans, having to spooge capex every quarter. I think their last quarter trailing was like 23.7 billion negative free cash flow. They're just detonating all their cash into this. So S&P downgrading them is more of a warning than anything, because one more downgrade and they become something called a fallen angel, which is happened to, I think, Ford last. It's when people borrow in the market, Oracle has investment grade credit, which means they can be held, their bonds, the debt, some of the debt they issue, their bonds can be held in investment funds. Problem is, if they get downgraded to junk, then suddenly all of those funds have to, it's not a personal thing, they have to dump all of Oracle's bonds because Oracle will no longer be investment grade. At that point, they've become a fallen angel. Their borrowing costs like double just immediately, which will be a real problem when you have to build gigawatts of data center capacity. And so, yeah, Oracle is, people think I'm sowing my oats on OpenAI dying. No, Oracle is the one that I'm looking at. And by extension, I think that Oracle and OpenAI are basically running the same thing. They are basically reliant on each other. So in the end, I think Oracle gets killed by OpenAI, but I genuinely think people need to accept that we may lose Oracle, which, I mean, boo-hoo, but Oracle is really at risk here. They're at risk, and I'm actually surprised that the finance media is not more immediately on this, because this is not a situation where I'm being dramatic, where I'm saying, oh, what if this happened? The market would be ruined. I'm saying Oracle cannot afford to keep doing what it is doing. The only way that what it is doing will pay off is if OpenAI is able to make $284 billion a year and become profitable by 2030. And even before that, they're going to have to pay tens of billions of dollars to Oracle and to Microsoft and to CoreWeave and to Cerebras and to Amazon and probably Iron through Microsoft and Cypher's Anthropic. Anyway, the point is, when you add up all the numbers, the maths doesn't work. And at the core of this is Oracle.
So let me see if I've got this right. For Oracle to not implode, OpenAI has to pay its bills and it has to pay them on time.
Yes.
And for OpenAI not to implode, it needs the data centers Oracle are paying to build.
Yes.
But Oracle themselves have warned OpenAI might not pay, and pretty much all the construction is behind schedule.
Yes.
So there's already no way any of this works out before Oracle gets downgraded, essentially, and then its interest rates go up, and then its debts are basically lead to the destruction of the company.
Correct. So, to be clear, Oracle would probably be bailed out. But when I say bailed out, because people are going to respond to this, they always go, well, I'll get bailed out. Oh, they'll get bailed out. It's always that. It's always this doomerism without thinking. So, Oracle itself will not be allowed to die. When I say Oracle itself, I mean the database company. They will either be split apart and sold in parts to someone else. They will be given funds to keep going, because Oracle runs a ton of actual public sector stuff across the world. The government stuff over in America, NatSec stuff, they actually have an important systemic core to them. The AI data center, not so much. So people will say, well, Oracle can't be bailed out. Or, well, they can be bailed out, so the stock will be fine. No. The problem here is, one slight addendum to all of this is OpenAI needs this capacity from Oracle, but they also need to be able to pay for it. They actually need to be able to have the money to pay for it. They also need to grow enough to need it, and that is not going to happen, because if they're paying $70 billion a year in compute just to Oracle, it means that they're paying probably another 40, 50 to Microsoft and Amazon. They'll be paying like $150 billion of compute a year, which just, they are never going to be that scale. So that is bad on many different reasons. But let's get to something a little slightly different subject, but still on Oracle. Larry Ellison. The funny thing that might come out of this is that Larry Ellison may no longer be one of the richest people in the world, because Larry Ellison, he's profited up about 346 million of his Oracle shares, right? And he's used them for his own margin loans, as in for his own personal loans, right? And he has about $1.16 billion worth of Oracle shares. He's 40% of the company. So he's got margin. You know how a margin loan works? Kind of like you give stock, they give you a loan, and if the value of the stock goes down, you have to give them more stock or give them more cash. So that's how Larry Ellison funds his entire life. And Larry has plenty of stock. Problem is he's trying to merge Paramount and Warner Brothers Discovery. He's trying to mush them together with his two large adult sons. Now, to do this, he's offered up $20 billion of his own cash. Now, Larry doesn't have that cash. He's got about $10 billion cash, $15 billion in Tesla stock. So he's going to have to take out another margin loan on his Oracle stock. That's fine. He's got plenty of it, right? Not if Oracle's stock starts crashing because OpenAI can't pay it. Now, if Oracle stock starts going down and it gets anywhere near $70, Mad Larry's going to have to proffer up more and more Oracle stock. He's going to have to give them more stock to keep up with the margin loans. And this is going to start really affecting Oracle's credit more and will likely lead to their downgrade, because on a very simple level, you have someone who has 40% of the shares of a company, and they are using them to fund their lifestyle and their weird, greasy sons' purchases. So you have to downgrade them. You can't really trust that the company is being run in the interest of the company or the shareholders, but in the interest of Larry Ellison. So as that starts to detonate, and it doesn't even take OpenAI dying for this to happen, it's just the market just needs to believe that OpenAI won't pay. So as Oracle's stock crashes, Larry will have to offer up more stock, and eventually he's not going to have enough stock to do it, or he's going to have to start paying cash, which will require him to sell Oracle stock, which will send Oracle stock down, which will mean he has to give more stock for his margin loans. So we may see within the next year a situation where Clammy Sam Altman, Clamuel himself, ends up genuinely destroying Larry Ellison, and the Paramount deal may not be able to go through. Like, it may actually not be able to go through just because the cash may not be there, or the stock will be in such a sorry state that closing the deal will be very difficult. And then there's the other side, which is if the Paramount Warner Brothers deal gets delayed past September 30th, they have to pay about $500 million a quarter just to keep the deal alive. Anyway, put aside the deal, Larry's still screwed. Larry still is... Oracle's stock value can only go up if OpenAI does the undoable. And it must keep going up. And up and up and up. Because remember, a year ago it was $350. As I'm looking right now, it's about $125 a share. I realized that was a little complex, but long and short of it is, people assume that the rich are unkillable. I'm not saying literally killable, but like their empires cannot be destroyed, that they cannot be rendered because they're so rich. And Larry Ellison is not ending this as anything other than a billionaire. But he really has bet everything on OpenAI. He really has put everything into this company. And even if there was some situation where Anthropic was profitable, even some messy profitability, they could not afford this capacity. No one can. It's so much. It's so much capacity. And this is before you realize that SoftBank's apparently doing 10 gigawatts of capacity for OpenAI as well. They have an $138 billion deal with Amazon. They have a $250 million incremental Azure revenue. OpenAI has promised everyone everything. The difference between everyone else and Oracle is that they have done the smart thing of not building as fast as Sam Altman demands. And I think we're going to see the people that got harmed the most are those who trusted Sam Altman the most.
There's no way to segue out.
I know.
Let's move on to some other stuff I saw this week as well then. SoftBank CEO Masayoshi Son dismissed bubble fears while in pretty much the same breath saying that AI would cost $5 trillion a year globally by 2040, which is a strong thing to say. He also said we'd need fusion power to get there, and I'm honestly surprised he didn't say that we would need quantum computing. He didn't mention quantum computing at all, as far as I can tell. But when I saw his claim, it was kind of the perfect example of what you've been pointing out for a while, which is we're being told to ignore what's happening right now on the promise of not one, but in this case, two technologies that are not commercially scalable.
Yeah.
What was your reaction to seeing that?
I mean, he may as well have said the Grinches are going to build the AI factory with the geese we were talking about last week at this point. Masayoshi Son just says stuff. Everyone just says stuff. If you look around everyone talking AI, everyone's just saying, yeah, we're going to have a bazillion GPUs and AI is going to take negative seconds. It's going to be ready with its answers before you ask it. There's going to be data centers in every house. It's just, this is what mania looks like. When no one wants to talk about what's happening in front of them, when they tell you to ignore your lying eyes. Because Masayoshi-san can't talk about what's happening right now. Because he'd have to say, yeah, so OpenAI loses tens of billions of dollars a year, and we feed them 800 billion or so a year. We did that in 2025. And SoftBank has no more stuff to sell, by the way. They've sold off all their T-Mobile, all their Nvidia. They've leveraged about, they actually have a very similar problem to Oracle. SoftBank has no more stuff to sell, by the way. They've sold off all their T-Mobile, all their Nvidia. They've leveraged about, they actually have a very similar problem to Oracle, where they can't really they own 80% of ARM, the chip maker, which is a great investment, but they are getting to the point where they're at the limit of how much they can use it for a margin loan. And they also can't liquidate it, because if you start doing that too much, the market starts treating ARM stock as a bet on SoftBank. And the moment that happens, that ruins both companies, because ARM no longer becomes about selling chips, it becomes how funny is Masayoshi-san sounding today. Masayoshi-san is reaching the heights of his crazy that I've never seen, ever. And I love this guy. Kakashi, great pseudonymous analyst I read, did a great thing about SoftBank. Apparently when Masayoshi-san was a 6-year-old, his dad saw him fighting his brother. He was getting his ass kicked by his brother. He kept going back in, and he picked up Masayoshi-san, looked at him, and he looked in his eyes and he said, that bastard is not human. That was about Masayoshi-san as a 6-year-old, by the way, and that's a real story. I'm serious. Point is, Masayoshi-san is a little bit of a nutter. He's a little bit of a nutter, and he's just saying stuff arbitrarily because this is how gamblers work. This is how gambling works. You believe in everything so much, and you just keep hoping and praying, and in general it works out for Masayoshi-san by pure luck. The problem is, just like Mad Larry Ellison, Masayoshi ARM, as part of the AI trade, is at the mercy of OpenAI falling apart. So if the AI trade falls apart, ARM falls apart, which means Masayoshi-san doesn't have his valuable stocks that he can keep paying his bills so he can keep investing in OpenAI. This is the Lehman Brothers of AI. It keeps coming back to this point because that's what OpenAI is. They are the load-bearing fail son of the AI generation. And so, yeah, he's going to say we need $5 trillion a year. Doesn't even make any sense. What does that mean? $5 trillion a year in what? Compute spend? AI data center spend? Like, is he just getting $5 trillion? What is that money for? And the thing is, the fact that the media just quotes it and doesn't really push back is sickening. And the reason he's doing it is because this has worked for the past 4 years. You could say basically anything, and the media will be like, yeah, it's pro-AI, I'm just going to put that at the top and move on to the rest of my job, by which I mean copy-pasting what CEOs say. And when this all falls apart, I genuinely think there's going to be an authority crisis where people look at the media and go, hey, why did you believe every insane thing said by a CEO for 4 years? Why did you do that? Because it was like regular people with real jobs who have to actually pay bills and such. They could kind of see how unrealistic this is. And on top of that, I think it's enraging to regular people because, I don't know, anyone try and get a mortgage or a loan recently? Anyone else try and like buy something? It's more expensive. Everything's more expensive and harder to do for a regular person. If you're buying AI GPUs, there's like 11 different Patagonia gargoyles who will give you $1 billion. if you're trying to build an AI data center, Jensen Huang will give you the money to do it and guarantee you business. AI is this vivid and almost pornographic illustration of the unfairness of capitalism. And it's so egregious and horrible that I think it's almost become bipartisan to hate AI. You got right-wing people, left-wing people, centrist people. Actually, no, the centrists love AI. They're like, interesting. I don't have to make a decision. LLMs will tell me what to do. Brilliant. I don't have to come to any opinions. But everyone else is kind of like, this is just a deeply unfair, aggressive kind of monster that eats everything around it. It consumes and it destroys. Regular people suffer more as AI people win more. So I think we're getting to a point where, as this accelerates, people are almost excited for it to die. And the people that aren't excited, the people who are like, ooh, I can't wait to play with my LLMs today, they are becoming more distanced and ostracized than they realize.
Something else that caught my eye this week, which could also be a big trouble for OpenAI, the information was reporting it. According to them, Meta is planning to undercut OpenAI's prices by about 75%, using its sort of ad revenues to do so. And OpenAI and Anthropic are already running on massive losses. So what happens if Meta does come in and just offers access to frontier models at a fraction of the cost and takes the fee out from under them?
Classic Zuck move. Classic Zuck move. Late to the party, and all he does is pisses everyone off. He will come in, as much demand as exists for AI for now will maybe float to him. But what it will actually do, I don't think all the demand's going to flow to him. It's just going to start dispersing the demand. Kimi K3 came out yesterday, and apparently scores better than Fable. We'll see. It could be benchmarking, it doesn't matter. But what these new models do is it's not that their danger is not like that they're going to rip all of OpenAI and Anthropic's business away. That's not going to happen, or at least it's not going to happen very quickly. What it's going to do is just start lowering demand or dispersing demand across more parties. And as I've said before, OpenAI and Anthropic cannot afford to slow down. They have over $1.1 trillion worth of compute commitments. I assume that these were signed in ink, so they will have to pay them, and they cannot slow down. Like, Anthropic will need to be able to pay $100 billion in compute costs in 2 years. That's OpenAI within 2 years, probably more. How are they meant to afford that? No one can really answer that one, of course. So something coming along that says, I can do what Fable or Sol or what have you can do cheaper, just means that there's going to be a chunk of revenue that doesn't make it, or a chunk of growth that doesn't happen because people will be experimenting. This cannot happen when you need everything to grow all at once. So yeah, Meta's probably going to try and lug the cart. I could see that happening. I mean, they're talking about it. Axon Wong's been on Twitter going off about it. But at the same time, Meta's made a bunch of promises in the past that didn't turn out to be anything, so we don't know. I have seen a lot of hubbub about their new Spark 1.1, I think it is.
Yeah.
I've yet to see a ton of people using it. Because you usually, with these new things, you get people who try it, they go, wow, this is crazy, it's beating this and that, and then nothing happens. The question is whether real AI loads are going to move to these things. But I do think the overall effect, regardless, is going to be, it just starts diluting demand to the point that it becomes very difficult to keep growing at that rate.
Earlier this week, it was the Palo Alto CEO who said that prices need to come down 90% by next year and 20% by this year. And I mean, if Meta comes in and says we'll do 75% right now, it kind of goes back to my first question, but is it enough to make them relevant in AI? Because they kind of haven't been, and is cheaper enough to do it for them.
The thing is with Meta, it's what are you doing? Like they're saying, oh, the other labs have crazy margins. Do they, or do you just saying that so that you can jingle the keys to the AI boosters? I think the Meta's just doing whatever. 6 months ago, they were saying they were building AGI. Now they're going to become a NeoCloud, selling their own closed source model. I think Meta is just reacting to what's directly in front of their face at any particular moment. I don't think Meta has a particularly nuanced or detailed strategy here. I think they're going to stand this up. It's going to score. Well, it's already scored well, and then they're going to get enough demand to kind of say, okay, well, now we're somewhat competitive, and Wall Street will go, okay, but how much money do you make out of it? And they're going to say, or can possibly say, because Meta's spent what, 100 billion or more capex on this now. If they come out and they say, yeah, we made $300 million in a quarter, that's the ads they get off of scamming grannies. Like, they make that much money just selling T-shirts via ads. Like, this Meta prints money from its ad division, saying we spent 100 and something billion dollars to make a incremental amount of cloud revenue. That's insane. That's not a fun story. It's not the kind of story I think that you'll see buy-side analysts say, ooh, yay, money up. But I think investors at scale will say, is that it? Which I think is actually going to be kind of the summary of the AI bubble in the end. It's going to be, was that it? Was all that money for this? Because that's really the story. It's like, wow, $1 trillion+ and we got AI models that lose money in one of the most annoying debates in technology.
Well, Ed Zitron, thanks for taking the time.
Thanks for having me.
If you enjoyed today's episode of the Tech Report, please consider liking and subscribing. Also, if you didn't know, you can get episodes of the Tech Report wherever you get your podcasts.
You guys have to check this out. So you can basically enter a prompt like this and add a few details, and then the AI will essentially create a fully functioning website for you. You can even test out different layouts, different colors. You can even generate new images directly within the tool itself. I'm blown away. Honestly, this is such a game changer. This is going to make WordPress so much more accessible to anyone who wants an intuitive way to make their dream website.
I need to go back and re-listen to that.
AI benchmarks are marketing, they're not science. They pretend to be sort of science flavored. Absolutely everyone tunes their models to all the benchmarks. Because once they're available, you just tune yourself to them and you pass them. If there's a new benchmark, these are often funded by the AI vendors, and quite often OpenAI is notorious for this, they get early access to them. Commoditization would work if there was anyone making a profit selling this stuff, and there isn't, because it's all heavily subsidized. And running a local model, as anyone who's done it will discover, if you want performance, you'll pay a lot.
Hi, I'm Isaac, and joining me again on the Tech Report today is author and host of Pivot to AI, David Gerard. Thanks for being here.
Good morning.
It's been a little less than a week since Moonshot's OpenWay LLM Kimi 3 was released, and I just read the company is pausing taking on new subscriptions because of demand for it. People have called it a breakthrough and another DeepSeek moment, but now that some independent testing has been done, I do want to take a look at how significant it really is. And let's start with the benchmarks, as that's what we were first given as well. They show Kimi 3 as performing on par-ish with frontier models, but what do you think?
So, I'm not a big fan of benchmarks in general. AI benchmarks are marketing, they're not science. They pretend to be sort of science flavored. They only exist for press releases. Absolutely everyone tunes their models to all the benchmarks. Because once they're available, you just tune yourself to them and you pass them. And if there's a new benchmark, these are often funded by the AI vendors, and quite often OpenAI is notorious for this, they get early access to them. If you ever see a new benchmark, look at who's paying for it, and you'll notice their models are suddenly doing really well. As science, they're sort of bad, they tend to do a single run or pick one of the best runs, but not do a sort of anything scientific. They don't do like a list of how many runs they did, what the variance was, how reproducible the runs are, error bars, standard deviations, all the stuff you'd see in an actual paper. They don't do. They just say, we scored 51%, up from 46% on the test the artificial test we made up. That's great, mate. This has been a problem forever. There's a paper on this like back to February 2025. They were noticing this, because it's been going on for a couple of years by that stage, where the benchmarks were just spurious and mostly vendor funded. Again, a favorite move for OpenAI. There's unclear claims of what a benchmark is supposed to measure. Unclear origins of the data sets, results which don't read like a result in a scientific measurement. They read like a pitch to investors. And they are really, really easy to game. So this is nothing against Kimi in particular. It's just like, it's how the whole industry works. There's no independent body testing AIs. There's no independent, testing models. There's just what the vendors do. There's what individual researchers funded by the vendors do. And it's all pretty spurious. So I can fully believe that Kimi K3 trounces the benchmarks. It would be surprising if it did not. But you go to OpenLlama and you see, hey, I've got a great new model. It does fantastically. And it's sort of like a 2-year-old reweighting of some open weight model. But it does really well on benchmarks. Because of course it does. So doing well on benchmarks means very little, except that it's really good marketing, because the market has a memory of a goldfish to say, this is a new one. And all the people who've said next model broke and say, see, told you. So, yeah, I don't put a lot by it. I've no idea what it's like as an actual model, but yeah, it's not going to be all that huge. It's not significant is what I'm saying. I don't expect it to mean something that a user would notice.
So for those that are looking at the parameters of K3, it's around 2.8 trillion compared to Fable 5's 6 trillion parameter model. What does that suggest?
Large language model performance, the actual like LLM at the middle of the whole sort of chatbot harness, it basically depends only on how much data is in it, and everyone uses more or less the same data. You pour in the whole common crawl, which is a snapshot of the internet, the public internet, and they'll do things like pour in all the books, and the Anthropic settlement's just been approved and stuff like that. So, but different models are very comparable on terms of what they do depends on the amount of training data and not much else. It's like they're all sort of, large language models are lossy compressors for text, which is why you can get them to spit out a Fidelitous copy of Harry Potter or something, because it's highly trained on it. But they're basically, it's not quite a perfect copy, it's a lossy copy. It's like a JPEG for text, and you can have different JPEG encoders and decoders, but they all depend on how many bytes you put into the JPEG to how good the image is. It's sort of analogous, I'm saying. It's a loose analogy, but I think it's a useful one. So 2.8 trillion parameters, that's a lot of parameters. That's a big model. That's definitely they're going to make it open weights, and good luck, because you're going to need quite a lot of bytes to actually even run this thing. Terabytes of RAM, terabytes of video RAM. Good luck if you're haven't actually got a data center of your own with large NVIDIA rigs in it. It's open weight in principle, so that's nice. I'm sure people will try to distill it and so on, down to a smaller model, which performs almost as well, but not quite, like a slightly lossier JPEG. So basically, it's size is important.
You. Just you, building your app on Base 44.
So that means it's sort of like in competition with the gigantism of the big models. I'm not sure it gets them a lot, because as I said previously, we're on a sort of S-curve, and we're very much at the top of it with large language.
Hi everybody, I'm John Kiriakou, and welcome back to the briefing room. Before we jump into the news, and today is a day packed with news, I want to say thank you again for liking, for subscribing, for commenting, for following, and telling your family and friends about the podcast. We're growing by leaps and bounds, and it's just because of you. So thank you very, very much for that. Well, let's jump in. There is a lot to go over. We've got a packed show today. First, Vice President J.D. Vance carried out a remarkable interview with Joe Rogan. Why did he suddenly admit that the Trump administration has mishandled the Epstein files? And what is that?
This place, how much did you spend on it again?
2.8 to buy it, 2 million to build it.
That's 4.8 in, and you're going to sell it for, what did you say, 6.5?
6.2.
I saw this guy on Instagram the other day. His name's Mark O'Brien. He buys and restores and sells brownstone homes in New York City. I thought it sounded awesome, and I thought, I don't want to make my living using screens all the time. I want to figure out how his life is, how his business is, the economics behind it. And so I called him up. I'm going to spend the day with him. We're going to figure out all the numbers and if it's actually something cool to do. Is his business actually any good? Is his lifestyle any good? Do I want to trade places with him? And at the end of this video, I'm going to give him a Sam score. We're going to look at the economics of his business. Does it make a lot of money? And then we're going to have a lifestyle category where we ask ourselves, is this actually something that you feel pride in? Is it a good lifestyle? So let's get through it. Oh, I fucked up. I messed up. I can't even figure out how to use Apple Maps to get to where he lives, let alone build a freaking brownstone. All right, so let's go this way. Okay, so he DM'd us where to meet him. It's 11:45, a few minutes away. We're gonna walk a couple blocks. This guy, he looks like the Dos Equis man, like the most interesting man alive. He's got these kind of like movie star good looks, and I don't know too much about him other than he looks awesome and he has a cool job. And so where we're meeting is at his apartment, and then we're going to go to a townhome that he's currently restoring, as well as a commercial property that he's restoring. I'm excited, but I'm a little nervous. I don't want to look stupid because I know nothing about like construction. I'm wearing Red Wing boots, but the reality is I'm cosplaying. I'm a yuppie guy who's trying to dress like a blue collar guy. So like, hopefully he doesn't call me out on that, but it's the truth. Mark O'Brien, what's up, dude?
Sam, what's up, man?
Hey, man. All right.
Nice to finally meet you.
Yes, we're gonna start with this place. So where are we now? This is your house?
94 Bank Street. It's a project, and but I'm living in it. So look, I usually buy things that have rats in the cellar and holes in the roof and water damage everywhere, mold and problems. But this one, when I walked into it, I was like, this is cute. It's 180 years old.
It's 180?
180 years old. I mean, it's super old.
How much did you pay for this place?
5.5.
How much money are you gonna have to invest in it?
At this stage, closer to 6.
How much can you sell it for?
17.
Can we see it?
Yeah, let's go ahead.
Hey, really quick, guys, if you're interested in this, and if you're interested in that blue-collar lifestyle, which frankly, I am, that's why I'm making this video, and you want to start a business in this space, we have put together this thing called a blue-collar business database. It's a database with hundreds of different business ideas where you can use your hands, you can start immediately, lots of different metrics about why the business is potentially interesting, and so if you're interested,
I love living in here.
link below, totally free. All right, now back to the other.
So when I walked in, these floors are shiny. I just, it just glistened. I thought, I love the floors. I came in here. I love the fireplace. And speaking, we talked a little bit about buying the old furniture. Like, I'm really not fancy. I love just stacking I love living in the West Village, which is super fancy. But I bring the people are like, you bring all that firewood in? Like, where are you gonna put it? Like this is the beauty of living in a house
This is
that's
insane.
banged up.
It's insane that a home that's gonna sell for $17 million, you are.
I'm stacking.
That's not how they're gonna use it.
That's right.
So when do you think this will be done? This project?
So it's been 2.5 years that I've been waiting for permits. It's landmark.
Do you just sit and do nothing?
No, it's a lot of work of architects, engineers, getting soil bearing tests. You know, they've got to break up the foundation down below in the cellar, and I can show it to you. And then they want to see, where's my neighbor's foundation? Where's the footing? Where's my footing compared to their footing?
But it's like just getting the permits and doing all this regulatory stuff. It seems like that's like the thing that, like when people talk about like products that they're going to sell on the internet, they think, oh, my product's amazing. I'm like, yeah, but like the reality is you have to be a good marketer. 70% of the value is like, are you good at like buying ads online? With this, it's like, well, I can build this amazing place. I can make a profit on it. I can do it cheaply. But it's like, yeah, but can you spend the years like jumping through the hoops of like getting approvals and all this other stuff that you didn't like?
It's the cost to carry it. It's in time. Time will kill every deal, and often it does.
Can we see the rest?
Yeah. So, and actually, so this is funny because I'm using this as my bedroom because I moved in. I thought I'm going to be here for 6 months, maybe a year, and then it's going to be a demolition site. I'm going to restore all of this. So there's going to be, you know, plastic up everywhere and workers running around. So I'm going to just keep the footprint here and let's start working upstairs.
I don't know much about real estate, but the limited amount of stuff that I've done, it seems like everything costs way more and takes way more time.
Yes, yeah, it's just out of control, and it's getting worse and worse. So this is my desk, my office. Look at this fireplace here. I mean, isn't that?
Is this your brand?
Oh, that's my vodka brand. Yeah, Broken Shed, New Zealand vodka. I make it from whey, 100% New Zealand products, water from New Zealand, whey from New Zealand, which is. You know,
this is a business that you owned and started?
Yeah, I spoke to a guy about this recently, and he was like, "Well, how did you get into real estate? Like, what was that thing that made you get into real estate?" And I said, "Desperation. Like I was freaking out. I had 2.5 kids. I was living in Greenwich, Connecticut, in a house that I had no right."
Was it a fancy house?
No, that's what. No,
it was like a thing that you were going to fix.
Yes, exactly.
Okay, so
well, it was something that I would have had somebody else fix.
Right. Okay.
Because I wasn't building houses.
So it
yet.
seemed like maybe you took a project that maybe was a little bit over your head, and then you were like, well, I have to make it work.
Right. Yeah.
Got it.
Exactly.
And did that work?
Yes. Yeah. And that's kind of always how I've lived. So you're like.
And that was like how you got into real estate.
Yes. It was. I was completely over leveraged. So I'm a big believer in leverage. And use other people's money, the bank's money. But it's a great way to go broke and get yourself in a lot of trouble. And I know people that have done that and hasn't worked out very well.
Dude, that's like how so many great things happen. Particularly, I just turned 37, but like I think about this all the time. Like if I lost it all, okay, I have young kids. I'm now like a proper man. I have people who rely on me, and like if this goes, it's like it's my job to like to take care of this group. It's like the most emasculating feeling ever of like, shit, I have not taken care of the thing that I'm supposed to take care of. I feel behind, and now it's my back against the wall, and I have to, and it's like, well, that's the beginning of a great story. Yeah. Hopefully it's going to be a great story, but that's like a very scary primal feeling. I have nightmares about that as like a dad. Did you,
I think, hey, should we also, do you want to walk out, step outside and, dude, now the sun's coming out.
How many, so you've been doing this, how old are you?
How old are you?
I don't know.
Come on.
55?
51.
51? I don't know, man. See, this is why I hate playing this game.
No, I'm 63.
Oh.
Okay.
I hate that.
51.
51? I don't know, man. See, this is why I hate playing this game.
No, I'm 63.
Oh.
Okay.
I hate that game. Oh.
So do I. I usually say, go fuck yourself. I'm not playing.
Your specialty, I think, is townhomes, right?
Townhouses, brownstones, restoration.
How many have you bought and sold?
So this is my third big project of restoring brownstone. So 62 Green Avenue in Fort Greene, 428 Vanderbilt, and 94 Bank Street. And then I've got other projects like in Crown Heights, one over here on Jane Street that I act as the owner's rep. So I don't own it, but I run the project.
And then before that, you were just selling real estate.
No, so I bought against my house, so I would buy another one.
That's insane that you would get into this business without knowing anything about it.
And at a big, high level. I mean,
So how much had you took a loan out? What was your?
So, all right, so the numbers on the first one, and the numbers back then were basically you buy for $1 million, build for $1 million, and sell for $3 million. So you make $1 million. So this house was $800,000. I built it for about $800,000, and I made a lot of mistakes. I mean, crazy.
You were in for 1.6.
Yeah, and I sold it for like 2.3 or something.
Over how much time?
Like less than a year.
So that's like a double, right? Is that a double or is that a home run, right?
I mean, it could have been, but the next one I made $1 million. I was like,
That's a home run.
I was like, I like this.
Okay, so you're like, I'm good. I'm good at this now.
So then I started doing more. I did 4. I would get like 4 going at a time. I'd buy a piece of property. I'd run with my kids in a stroller, 3 of them, and I'd see an old lady. I'd be like, I love your house. I got all these kids. Look at these kids. I'm looking for something a little bit bigger. I live over on Rocky Point right now. It was something bigger. And this woman, Pat's like, oh yeah, no, hi kids, and yeah, well give me your number, and I give her a number, and I would do that, put it in mailboxes. It was a numbers game.
So it's kind of like boom and bust a little bit.
Yes, very much, and it's funny.
Does that stress you out?
Yeah, but I've gotten good at it. I think. I do a lot of yoga.
I thought it was gonna be like hammer shit all day, and it's like fun.
No.
You wanna go see the?
Yeah, let's hit it.
This is huge. How big is this one?
Yeah, so this I bought like 2-ish years ago. So this has taken me way too long.
What's the total square footage?
So now it's like 4,500.
Okay, so you paid 2.8. How much are you gonna put in?
I'm putting in 1.8. That's turning into more like 2 million.
And what can you get for it?
6.2.
It's pretty slim.
So check this out. This is super cool. This I just discovered it like maybe 3 months ago. It had plastic vinyl floor over it, and I just assumed it was rotten, and I was going to sweep it out or something, and I pulled on a piece of the plastic, and it came up, and I was like, I wonder what's under there.
And this would be like 100 years old, right?
Paint on top of yeah, this is 140 years old. And so I took my grinder out and started grinding, and man, I find this. So look, some people say, yeah, it's kind of banged up. You should really just put something over the top of it. Nice Ansax tile. I'm like, I don't care. So this is all an extension here. So there's 2 things that I do. I like to go onto the roof. I like to finish, or 3 things: the roof, the cellar, and I widen the staircase so you can kind of tell that there's more of a gap, because brownstones are notorious for being a little dark in the middle because there's no windows in the middle typically. So I widen the staircase and I put a lot of light and a bulkhead on the top, so you get light down the middle, and then this is all original.
Those bricks are those original?
Yeah. So and this also.
So these bricks are 140 years old?
Yeah.
That's pretty awesome.
So that's another thing. I exposed the brick. So this has sheetrock on it when I buy it. So I rip the sheetrock down, or not sheetrock, plaster. But usually the plaster starts cracking and decays against the.
So 140 years ago was 1880, right? Yeah.
Yeah.
Or 1890.
Yeah.
So someone made that in 1890. That's pretty crazy.
Yeah. Where you see the cellar. The cellar is literally rock, horsehair, and mud.
Let's see it.
Is the way they made these foundations. Anyway, so this is a typical rubble wall, right? So you got. Rocks, and then.
I grew up in a basement like this, and it smelled exactly like this.
Yeah, it's funny. I love it. But I also think it's important to get as much usable space as you can. As much.
This will be finished.
And this is basically free square footage because in terms of FAR,
you don't
floor area ratio, they don't count a basement because it's below grade. So I try to make it. And right now, you're not seeing it at the best. I got to put baseboard on, finish the floor, and really spruce it up so it feels like it's real space. It's not a.
So how much you think this home will sell for?
6.2.
What type of person would buy this house?
What kind of person?
What would the job be?
Probably I get a lot of creatives here in Brooklyn.
Like actors.
Fort Greene. No, more like people like these days in social media and doing some kind of media business.
That's crazy. Maybe you'll be buying a $6 million home in Brooklyn.
So this is a rental, basically. So you come under the stair.
Oh wow!
So there's your own entrance here, and this will be like a $5,000 rental or in-law suite. So you come in, you've got your fireplace, original. Big open living room, kitchen, washer dryer, bathroom, bedroom.
Oh, and they would get the backyard.
Bedroom, 2 bedrooms, washer dryer. I know it's in a weird place. And then a backyard. So
When will this be done? How much longer?
I'm hoping to have this, photos taken like in 2 weeks. So this will get, I'll put like
What does photos mean?
like pictures and start marketing it.
But it's not going to be done in 2 weeks.
No, but I can start selling it and start.
So when do you hope
promoting
for this to be sold?
it. End of the summer,
Oh, okay. And move-in would be when?
like September.
Oh, all right, cool. So you're nearing the end of a 2-year project,
Yeah,
2.5
yeah.
year project.
Yeah. So this will get pavers.
Do these guys work for you, or are they?
They're subcontractors. So everybody these days is a subcontractor. Nobody's, I'm not hiring a whole crew of people.
But you're going to come out of pocket with it.
Yeah.
Dude, there's so much risk.
Yeah.
All right, I work on a computer all day. This is my work, or this is weird, but talking to a mic.
We get it.
I want to do like
You want
this.
to bust something? Let's see if we got something upstairs.
All right, let's see.
What do you think? You want to?
Yes, I'll do that.
Let's get you dirty, right? My man, can I just, can I get him to cut it, or you want to break it? Can he cut just for 1 minute? Just one minute. He's not a spaz. Are you all right with this?
Let's do it.
But you gotta be careful when you hit that. Really hold it tight. Can you cut that?
All the way through?
All the way through, right? All the way?
Oh my god, this is so dangerous.
Good.
So, working,
You're fired.
what was he saying about the story about getting sued for being too dangerous?
Yeah, I mean, if OSHA
Thank you, sir. I'm sorry to mess up your workstation, but let's see. He's showing me how he worked out when he was in jail.
That's right.
Oh, there it is. That's pretty good. Oh, wow.
We're at 63. That's impressive.
You should put that on your Hinge profile. Alright, I'll try.
Are you goofy with me?
Not nearly as good, but
That's good and aggressive. You're just like because you could probably do it on your skateboard.
No, I can't do that on my skateboard.
No?
Well, I know I can't do that. I'll try.
Are you goofy with me?
On your Hinge profile. Alright, I'll try.
Are you goofy with me?
Not nearly as good, but
This guy's like a scammer.
You're just like because you could probably do it on your skateboard.
No, I can't do that on my skateboard.
No?
Well, I know I can't do that. Okay, we looked at his Manhattan place. We just looked at his Brooklyn place. This place, how much did you spend on it again?
2.8 to buy it, and then about $2 million to build it.
So that's 4.8 in, and you're going to sell it for, what did you say, 6.5?
6.2.
6.2, and that's over 3 years.
Right.
So you'll make something like $500,000 a year. So if you want to buy a $6 million, 4,500 square feet, right?
Yeah.
Home in Fort Greene. This place is awesome.
Around the corner from Spike Lee. But what a good time for him, right?
Deal of the century. All right, thank you. Very hospitable. We're gonna get our subway. All right, God bless. See you soon. All right, thank you for everything. I'll talk to you a little bit. All right, we just got back to the office. Let's give this thing a score. Okay, so I've divided this thing up by business and lifestyle because they're most important. We're gonna do money, machine, and mo.
Yeah, that one on there is something that I wanted to watch here. I don't know if it'll still be there. What time is it? How long has this been going?